Get your camera going.
Oh, we're live already, man.
See you.
You're not going to?
Hold on.
You'll have to tune into the stream to see us, man.
Oh, I see what you're saying. I see.
Yeah,
Yep,
you'll
yep.
be able to hear me, but that.
Gotcha.
Yeah. Let me. In fact, I gotta change an output here real quick. Voice and video. Bear with us. We gotta let some people join the stream. All right. Can you say something?
Hey. How's everybody doing today?
Nice. We'll do a little.
There we go.
Thriller says, "Hey, you guys are live." Huge.
Very nice. People are filing in. Wonderful.
Yeah. So far, I don't see any. The counter's not going up yet.
Oh, look, how's it going? Got a lot to talk about today.
Yeah. Hey, Crypto Joe. Moloch, what is going on, guys? Why don't I put the... I bet I can put the chat in the stream here. They'd like that.
Yeah, that'd be nice.
Elon is a great fella, isn't he? Oh, yeah.
Uh,
Yeah,
Love it.
he said he's going to get some developers to help make Dogecoin faster and safer
Why?
so he can pump his bag and dump on your head. Gold Crypto, what's up? Yeah, thanks. Yeah, we've been working on it. We've been putting a little elbow grease in here. Let's see.
Big news. Check out the scrolling banner at the top.
Oh no, it just exploded. We don't want to see that. I was trying to get the chat on here.
All good.
I did the wrong input. Oopsie doopsie. Who are the devs though? And does Doge have any devs? The guy who invented it copied it.
Sold his bag, right?
Oh, dude, he quit developing for it and said everybody should stop using it. This was just a joke. And yeah, he has like a quarter of the supply. That's art on itself, CG. EDM Squirrel, what's up, man? Fulcrum, welcome to the stream, guys. It's good to see you here.
Hey, Fulcrum, what's going on, bud?
I'm going to do a little window capture. Chatty. Let's see, we're going to do... Can I not do that? It won't let me do that either. I know there's a way. It's just been a while since I've done this. Yo, love the shirt. Where can you get one? They like your shirt, man.
Oh yeah, the Bitcoin shirt. Yeah, that's a good one. Trying to think where I got this online. Probably Amazon, right? Get everything on Amazon and in Corona times. Yep, that Moloch. Yeah,
Yeah.
that's the plan. Sync lending coming 6/22. We're in testing phases right now. Everything seems to be working very well. Polishing up little things, but we're on track right now. I'm really looking forward to it.
The cascading effect. Oh yeah, it is good to have an update on a frequent basis. We try to keep you guys in the loop.
Yeah, we want to bring you these streams more often, so almost weekly. I think that would be really good. Get some good community engagement. You know, almost like weekly AMAs with the community. Ask us what you want in the chat, and you know, we're not only going to talk about sync. We're going to talk about a bunch of things like the giant pink elephant in the room of Ethereum right now, which is the mother of all ruggers.
Oh yeah,
Vitalik himself,
the
man.
mother rugger.
Like,
Oh heck.
the mother of all rugs, man. Like, so crypto history was made. I think it was absolutely wonderful, in my opinion, what happened. Uh, for those of you guys that don't know, you had a bunch of these dog coins come out, and they've been exploding, just mooning, and what the developers would do is they would send half the supply to Vitalik, thinking that was like, oh, we're locking half the supply. And Vitalik sold pretty much all of them and rugged these projects that, in more than we're probably responsible for gas being $400 to send a transaction or something. They were destroying the network, running gas fees up, making ETH almost impossible to use, and from my opinion, Vitalik was basically like, I'm taking action against you and I'm going to destroy this shit. And it was great because you could see that they were already prepared to rug too, because as soon as he approved the approval function, it started to dump like hard.
Yeah, that was the Elon coin. Is that what that one was?
Yeah, so it's like you could see that they were already planning on rugging it because they had his address getting watched for the approval function. And it's like, good, I mean, you're destroying something that could help change the world for the better, and it's a net negative game. You're taking money from other people, so I'm super happy about it. Buy projects that are finished with good tech, without promises. I can't stress that enough. There's enough IOUs out there.
Roscoe Crypto, morning, man. How's it going, guys? Yeah, the whole Vitalik Ruggate situation was hilarious too, as we went to Reddit and saw people going like, who is this Vitalik and why is he running our coin? That's the one that really got me.
Like, oh my god.
Who's Vitalik? Why is he destroying our coin?
For the people in here that weren't around in years past, cycles past, like, this isn't a new thing. I mean, there's been tons of scams, IOUs, automatic trading bot tokens. Oh god,
dude, EDM Squirrel is right.
Hey.
He says he was mentioning Sheeb in his group since January and was like, what a stupid coin. And then I aped in April, but sold right away. So if you look at the Uniswap listed coin channel, there's thousands of Inu clones out there. I mean, I kind of did the same thing, I bought a little bit of Sheeb. It went up and I dumped it. And I'm like, was just watching it in astonishment as it just kept going up. And really, Vitalik donating all of that to charity was like the best thing he could have done. It's kind of funny that the Sheeb's community taking credit for it now, though. They're trying to spin it in a positive light for themselves. But, I mean, sending half their supply to somebody, anybody, not affiliated with the project was a really boneheaded move. That was just dumb.
And you can see how people, they just move in herds. Where it's like, the first one did all right, so let's launch another one, let's get into that, let's get into this one, and we'll do the same thing. And it's just these copycats with no actual real, they didn't do any real work. They just copied a bunch of people, and they're just trying to take your money. And for some reason, people jump on board with this. And it just doesn't make sense to me. It doesn't.
Yeah, I mean, I don't really get it either. I think, yeah, billion dollar tax write-off, Molik says. Yeah, that's right. Sinking one.
Yeah.
Dude, I mean, how sick of a Chad move is that, though? I mean, would you do that? It's easy to say you went after...
It's funny because I had said to our admins the day before, I was like, if if I could have it my way, I hope Vitalik sells every single token all at once. And then it was like 24 hours later, he actually did it. I
Yeah.
was like jumping up and down, screaming like, "This is amazing!" Like, not that I want people to lose money, but you know, you need to do research on your project. And when I first got into crypto, I got wrecked. I got absolutely destroyed. This is going back almost 5 years ago, and just got onto a hype train, followed the masses at the top, got wrecked. I think I lost like 7K, like almost instantly. It was pretty much all the funds that I had to invest at the time. And yeah, it's destroyed. So it's almost like you need to kind of learn those hard lessons, because if making millions of dollars was easy by trading, everybody would do it. But it turns out that taking other people's money is actually really difficult to do, because everyone's trying to do it. And new people that come in, they think they can do it. And it's super dangerous. And you're going to be a statistic, and you're going to be in the 99% that get wrecked. So chill. You need to get into projects that are finished, that didn't give you an IOU. Yeah.
Dude, like these projects like Sheeb, they're low effort, right? Anything that's low effort is going to be low value in the long run. I mean, it's easy to copy Uniswap. It was like extremely hard to build it in the first place, right?
Yeah.
I mean, I guess they copied parts of it from Bancor or whatever, but I mean, they made something that was a lot better. You know,
Right.
you look at V3, and that's not a copy of anything. That's like totally new technology. It's really impressive what they've done. Can't say that I really like everything about it. I've encountered some bugs.
There's definitely some huge like flaws or maybe red flags. It's not as user friendly. If you don't have a ton of time to sit at the computer and basically watch the price chart, you could end up getting pretty wrecked pretty quickly.
Yeah. Luckily, I did go to their GitHub and talk to Noah, the developer of Uniswap, and I raised the issue with him and shared it with him, and after they dismissed it several times as being like an isolated case, the ticket got swarmed with other people with the same problem, and then they addressed it. And in the meantime, okay, Crypto Joe, you want to talk about the pros and cons of V3 versus V2? Yeah, let's go with it, man. I put some liquidity into V3. It got stuck. It went out of position. I could not withdraw my liquidity for almost over a week.
Yeah, it was about a week, and it was a lot of liquidity. So, that's the other thing with V3. So maybe we should go into how it works, and that there's ranges that you can set. I guess
it's really strange.
Let's start with V2 actually, because a lot of people don't even understand how liquidity pools work on V2 or how any AMM works. So let's start. Maybe we should start there.
Yeah, Crypto Joe says V3 concentrated liquidity provision. High likelihood of high and permanent loss when outside the range, no fees. It's not a high likelihood, it's a guarantee.
Yeah, it's guaranteed.
I mean, the thing about impermanent loss, though, is it's not permanent. So, I mean, while, you do go out of your range and you get impermanent loss right away, like if you set a narrow range where it's like $10 over and under the asset, and in 5 minutes it goes out, you're selling like 100% one way or 100% the other way in just $10 moves, in the token price. But for having your liquidity concentrated in that small area, you make a lot more fees because they're mostly trading with your money. It's very complicated even for those who understand liquidity pool and liquidity pooling. And you're
going to end. Yeah, it's going to end up breaking up into almost like kind of an interesting way to make an order book in DeFi, but you're going to end up concentrating the liquidity around just the known fib levels that people just draw on their chart. and then you're going to end up having gaps in the liquidity where you don't necessarily have that. You do have it in V2, but I can see this actually exacerbating that.
Me and Scott figured out a cool trick yesterday, though. We were looking at OpenSea to see all the liquidity positions that people are selling there. And they are. I mean, there's some for sale. Yo, Nabu, what's up, man? What's interesting, though, is to add a liquidity to a new position, you set your ranges, and then you have to mint an NFT, which has the same gas cost as when you mint a crypto bond, right? Well, you can go to OpenSea and buy ones that are already made that have no liquidity in them, just so you don't have to recreate an NFT.
Yeah.
So you could buy an empty liquidity position on OpenSea and then add your own liquidity to it and remove it, and you didn't have to pay the high gas price of minting the NFT.
Let's break that down a little bit for these guys. So,
Let's
like you get an
go.
NFT, number one, when you set your range, and then if you withdraw your liquidity, you keep that NFT. It's a blank NFT.
It's an empty liquidity
you can
position.
add more liquidity to, or take it out. But that NFT is only good for that preset price range that you initially set. So if you say you want to add, and fee. So if you want to go into like the ETH USDC pool between 4,500 and 4,200. It's going to be trading in that range, right? It's going to go back and forth as it approaches 4,500. It's going to move your position into all dollars, and as it goes down to the bottom of your range, it will basically buy ETH on the way down, and so you're at 100% ETH on the bottom, right? If it goes outside of that range and you withdraw your funds from that NFT or that price range, you can go into another one at the higher range or the lower range. But every time you go to start start a new NFT, it costs you like a few $100 in gas. So you can go and buy one that somebody else already emptied out their liquidity and is just selling you the empty NFT that you can now basically load up with your funds. So it's pretty cool.
You have to watch out though, because if they added the liquidity, if they created that liquidity token for a pool and they set the wrong fee, it's worthless. It will never make any. You'll never earn any fees if it has the wrong fee selected for that type of pool. So if you have it's definitely too complicated for 99% of people. So if you're in a stable coin pool that's like USDC to USDT, the Coinbase dollar to the Tether dollar, your fee must be set to like 0.05, and your slippage range should be your trading range should be between 99 cents and $1.01. And any other setting than that, it's not going to work. If you set the fee too high, all the people who added liquidity in with a lower fee are going to be the first dollars that trade. Your money will never earn any interest.
Yeah, and
even then, we're talking like you can have a huge liquidity position in the stablecoin pairs and not earn squat compared to the other pools.
Yeah, so that's like how V3 works in a nutshell. In V2, you're adding equal parts of both tokens into whatever pool you go into at the time of adding it, and then it automatically, as the price goes up, your token ratio just changes in proportion.
Well, that's not entirely true either. Like
to a certain extent.
It's crazy because when you're building one of these NFTs, you can put in 100%, like say it's ETH and USDC. You can put in 100% like stablecoin and mint your token and instantly be out of balance, like out of range. And so you can create an NFT with impermanent loss right away. And it's never worked. Like I don't know what the point that would serve to do anybody unless they were planning on buying on the way down. If it was part of their strategy, right? But again, that's really complicated. And you have to know what you're doing and plan on taking the worst of every trade. I don't know why you'd want to be on the opposite of it. Every good trade.
Here's the thing. Well, because I guess if you wanted to enter with like an alt cash position at whatever you think the top is, and it's a USDC ETH pair, right? And you enter with just 100% cash. If it starts dumping, that could be advantageous because you never know how far this is going to dump, right? Is it going to dump 5%? Is it going to dump 10, 15, 20, 50? You know? So if you only think it's going to maybe dump a few percent or something, adding that at the top seems like a pretty advantageous hedge to me.
Yeah, I mean, you could sell ETH, for example, all the way down. But if you knew it was going down and that was your plan, why wouldn't you just sell all of your ETH at the current rate?
In my opinion, you never know how far it's going to go down, when it's going to go down, or how far it's going to go up.
That's true.
And it's impossible to know. So, I mean, a lot of people, what their strategy is like it hits the next fib level and they sell a percentage of their stack, which is probably a smart thing to do because I mean, if you think about it, right? What was it? We're the 14th today. So, what, 2 weeks ago? If it was 2 weeks ago, let's just go back to the chart. People that bought Ethereum.
Like, everybody's up on Ethereum right now. Like, it's crazy.
Yeah, if you bought it less than a month ago, you're up like over 2x in no time at all. So, you know, when things jump 2x in 15 days on the largest crypto, to me, that's like someone's going to take profit, right? And that's probably when you want to get into those type of pools where it's a stable coin and either like Bitcoin or Ethereum or something, because if you think it's going to drop, then it's actually a good hedge to be in. Because if you sold all of your token, right, then you're in cash.
Yeah.
What if it keeps going up? You know, well, that sucks. So,
you know, and there's like it's funny to me how the timing of ETH running up correlates a lot with Warren Buffett's announcement that hyperinflation's coming. The Fed backed up what he said and said hyperinflation's coming. To me, being in dollars is what's kind of scary right now.
It terrifies me. It terrifies me.
Michael,
it wasn't just them. You had the New York Fed.
Michael Burry is interested in ETH. Really? Crypto
yeah, everybody should be interested in ETH because, in my opinion, like if the new implementations come about and they're successful and the sharding works out in ETH 2.0, and let's say transactions go back to, you know, a penny or less, ETH's going to flip Bitcoin's market cap. Because it's just Bitcoin's a store of value. It's, you know, it's going to be massive. I'm not saying it's going to be, ETH might not be worth more than Bitcoin coin-wise, but the market cap has the potential to be much higher because if you think about it, like,
well, it's halfway there.
We're just getting into like NFTs and what the NFT tech can do. Can you imagine if they start putting mortgages on NFTs or life insurance policies and all this stuff? It's the Internet of Things. So it can be far bigger than just a store of value network.
Yeah, everybody's looking for safe havens. Crypto's become a great competition to gold. Yeah, I mean, because if Elon is successful in his gold program, he will have shit tons of gold for very low cost. Because
he's gonna mine those asteroids.
Yeah, he'll land on some asteroids, drive them down to Earth, and just pick the gold up off the ground. You know, but looking at like the cost of mining Bitcoin, that's a big hot topic right now. How green is Bitcoin? It's not very green at all. Ethereum and Bitcoin, if you look at how much it costs to mine those, it still takes less energy than it takes to mine gold. And they're still mining gold, obviously.
Yeah, I don't see any Bitcoin.
So it's technically greener than actual gold.
You ever seen a coal mine?
Yeah.
You know, like how dirty that really is? Yeah, and what it does to the environment.
It's bad.
You know, or even just mining metals out of the ground in general. Like, you know, you get, I think they're called chat piles, and then it rains and you get all these horrible minerals that seep into the water and shit. So any kind of actual mining is like really bad.
Crypto Joe says,
I don't see any Bitcoin mines, you know, 300 feet down, you know, with piles of rubble around them.
Yeah. It takes a lot of energy to mine gold. Crypto Joe says, mining in space in the arse. I don't know, man. I mean, it seems very feasible to me to just drive an asteroid into the Earth and pick it up.
Super fucking.
I think all of crypto is greener than the banking industry. Well, that's probably true too, because you think about how many servers Visa has and how many servers every bank everywhere has. And crypto, yeah, that's a tough question. I don't even know how you quantify that. Tranquilizer, Korea. What's up, guys? Higher interest rate is bad for risky asset. I mean,
What do you mean?
yeah.
That doesn't.
I
If it's a
mean,
risky asset, like you should be associated with a higher rate because it's riskier. So the person that was giving out that loan
yeah, the
and is
people who
holding
take.
that debt wants to be more insulated from the risky asset. Yeah.
I mean, it depends on if you're being charged the interest or if you're making the interest. I mean,
Right. Yeah.
it depends on which side of it you're on. But I mean, at the same time, if whoever's taking the most risk should be rewarded the most. So
ETH will somewhat hold value in a crypto crash, in my opinion. Yeah, yeah. A lot of these cryptos hold 10% of their value in a crypto crash situation.
I really,
That's the thing.
earlier this week I tweeted out that it's going to be a shark week. Things are going to look pretty red, and I'm actually surprised it's not worse. It's pretty impressive how resilient everything is in this bull market. We're just still like, ETH doesn't care. Goes up 14% in 24 hours. That's insane.
Yeah, well, I mean, there's a lot of money printing going on.
Dude, Casapot, what's up? Crypto bonds are the future. Just pet the world, mature, and discover it. We all know it. And that's why we're here. Thoughts on Sync VRS versus other small caps in a bear market once everything finds a floor? Crypto, come on.
I think it's really advantageous to hold in a bear market if you know what you're doing. So this goes back into understanding liquidity pools. And if you don't really understand liquidity pools, you really need to do your homework because it's in your best interest to understand how these work, okay, and really understand them. Now, if you're expecting a bear market and nobody really knows when they're going to happen, but if you're expecting it, you should put yourself in a position that insulates your stack in some way, right? And liquidity pools are advantageous for that. So that's when you would, if you're thinking a top is coming, you should be entering, I would be entering like ETH USDC or ETH DAI pools, because that to me is safer than just selling all the tokens or selling a large amount of them and just holding the tokens where you're not earning anything on them. There's no passive income that's also helping you accrue more wealth at the same time.
Yeah, that's a good point.
You're taking on huge risk by just sitting in cash or just sitting in ETH or just in tokens in general and not in a liquidity pool. You're actually giving yourself more risk. So that's why I say understand the liquidity pools. If you think if you think everything's going to moon, for longer, maybe that's not the liquidity pool for you. It's the ETH Bitcoin pool, because those two assets seem to go up in tandem, where Bitcoin goes up 3x and then ETH follows at 3x. So you have a little impermanent loss and then it catches up. So you don't have any impermanent loss actually, and you actually just earned a bunch of fees along the way. So this is one of the main driving factors of why we chose liquidity tokens to actually make the crypto bonds with, instead of just ERC20 tokens.
Oh, and there's a really good point that I just remembered about Uniswap V2 versus V3. In V3, if you put in like $1,000, that's the liquidity you trade with, and it never grows. It never grows. You always have $1,000.
It doesn't compound. Yep.
It goes into a separate fund of fees that you can collect. You collect it by removing your liquidity or just collecting the fees, and then you'll have to re-add it back in. With Uniswap V2, you're constantly growing your position in the pool. So even though you don't technically get more tokens, those tokens always increase in value over time because proportionally they gain more ownership over the liquidity in the pool. That's automatic. That's like you get compounding for free by doing it that way. I think they took a big step backwards by moving away from that model, because now it's like, well, if you've been in a liquidity position, with $1,000 for a year, you were making that interest rates on $1,000, all year long. But on the old system, halfway through the year, all of your earnings were compounded back into that, and your liquidity position grew because you didn't remove it. Seems to be a better model. I don't understand why they didn't at least keep that aspect of it.
I think it's the fact that like people say impermanent loss, and it's such a, you know, most people when they hear it for the first time, they don't understand at all what that even means. I didn't, and it's a little scary. Oh, I don't know. That's impermanent loss. It's dangerous, and they don't understand how dangerous it really is. They don't understand the actual factors that go into it, and it's a lot of reading, and it's to really figure out what that really means. So I've read through it. I know Genix has read through it. We understand them, that's why we use them. And
the other problem with impermanent loss, dude, is you're always comparing it to the phantom, right? Like the theoretical selling of the top and buying at the bottom.
That's the other thing, it might not.
You don't know that.
If you added ETH Bitcoin liquidity at when ETH was, you know, $400, right? You had massive impermanent loss because if you had an ETH Bitcoin pair, right? You had massive impermanent loss when Bitcoin went to 60K and ETH was still under all-time high.
Yeah.
So, and if you just withdrew then, yeah, you would have been taking a huge L. But if you just waited another month, you made out like a bandit.
Oh yeah. You know, and it's like right now, if you go into the ETH Bitcoin pool, you can suffer impermanent loss if both of them go up in price. But like ETH right now, the market cap is half of Bitcoin approximately. Well, if ETH doubles and goes to $8,000, and you're in the liquidity pool, and that's a 50% gain on the ETH side of that pair, then you're going to suffer impermanent loss compared to if you just held ETH.
Yeah.
The thing is, though, you don't know that, right? I mean, that's like comparing yourself to actively trading. The DEX ETH pair has been the best performer liquidity pair for Sync. It's performed really well. Really well. In fact, DEX Tools has performed really well. Obviously, the Bitcoin ETH pair has performed really well. The Sync ETH pair has performed extremely well.
That's the other thing. I mean, like, you know, I understand people are like, oh, when moon. And I understand that, you know, we're a small cap DeFi token. I'm sure, you know, if you look at micro caps in DeFi right now, they're actually printing a lot of the same patterns that our chart is printing. But the one thing that we have is we went 80x in 80 days. All right, so then we have this retracement for a month or so. I can only imagine what happens when this girl starts ripping again. I mean, 80x in 80 days, 1x a day for 80 days.
Yeah,
Sign me up, man.
That's
awesome.
Really good. I'm going to take a look here and compare our liquidity pools across the board and see if I can see how it's
Does impermanent loss just depend on each coin's market price, sex, and other dexes, or buying and selling? And yeah, it's buying and selling in that actual pool. Because the way it works is ETH USD pool, right? You had $100 in ETH and $100 in USD. If I want to buy ETH, I actually go in, I put more dollars into the pool, and I remove Ethereum from the pool. So now the pool's ratio is changed a little bit, right? So, and if that change doesn't come back, that's pretty much what's known as impermanent loss. If the spread between when you entered goes above 3x, I think, in price, that's really when you see a impermanent loss starting to take a hold there.
Yeah, you know, impermanent loss happens when you put two tokens in together in equal amounts. It's when the pool supply has, like, if you imagine the supply of both assets in the pool starts to do this, that's when you get impermanent loss. And when that pool comes back to an even amount, whether the price is lower or higher on both doesn't matter. It's when they're in equal amounts to when you put in. So if you put in and the pool look like this, and the pool readjusts the supply both like that, you're at maximum impermanent loss. If it goes like this, you're at half impermanent loss. If it goes back to the way it was when you put in, you have no impermanent loss. So the price doesn't matter. It's the relationship of one to the other in the pool.
And the other thing is, like, you can have impermanent loss and still make money. That's what other people don't. You don't get that. They think that if you accrued impermanent loss, then you're losing money. But that's not the case. It's just what that means is, like, if it was an ETH USDC pool and you put liquidity into that at 400 and now it hit 4,000, yeah, that wasn't as efficient. You didn't make as much money as if just holding ETH for the 10x.
You didn't make as much money as a perfect trader.
You were selling ETH the whole time, which maybe that's a better risk management strategy for you. Because if you're not a trader, if you don't know sell signals and you don't know how to chart at all, you're going to get wrecked trying to trade. You're going to get wrecked. So you were basically just dollar cost averaging out on the way up, and you were selling the whole time, and that's fine because if you went in at 400 and you sold a little bit at 6 and sold a little bit at 1,000, and like, that's good. People don't normally take profits. They think, oh, I got in at 400, my bag is worth 100K now, this is amazing, it's going to go to 1 million, and 3 days later they're like, oh my god, I lost 70% of my money. And it's like, yeah, that's what happens. So don't be that guy or girl. Something we could add to the website to explain the chart. What do you mean? Which chart?
The charts at the bottom of that show the daily rate that's offered for crypto bonds. Maybe that's what you're talking about. Crypto Joe says, if in no rush to provide liquidity, it's a good idea to enter LP when the price ratio of the pair is average, not when one just mooned or crashed a lot. That's exactly right. You want it to trade within a band without going like way up or way down.
Yeah, and you can kind of see that on V2, like when there was a pretty strong signal that Bitcoin was gonna like rally hard, and I think it happened around like 14, maybe it was in between 14 and 20K, that you saw on Uniswap V2, it went from like $2.2 billion in liquidity, and then it like over $1 billion was removed in like one transaction or a few transactions, because that was people that were in these pools were like, oh no, this thing's gonna moon. I don't want to be in the liquidity pool right now because I don't want to experience any impermanent loss. People had a lot of faith in the market was going to go up, so they got out of their cash Bitcoin positions, so they didn't sell their Bitcoin, or sell their ETH, right? So you saw all this liquidity drop off, which actually helped the price moon, because then there was less tokens to actually buy up the price. Price moved and liquidity went back in, which helps stabilize the price. So it worked out pretty well.
I was just looking at our contract. We have $3.3 million locked in crypto bonds in liquidity pairs.
Yeah, that's just the liquidity tokens. So if you take into consideration the sync tokens as well, it's like almost over 6 million. We have our market cap locked in bonds, basically.
And not just our pair, like across other pairs. That's the other thing about crypto bonds I don't think we've really talked about in a while. For these other projects that get rugged, if they have like a significant amount of the liquidity locked in crypto bonds, you don't have to worry about that pool rugging as much. Like if you look at the sync token itself, with 80% of the pool locked up, there's only 20% of the pool left over for people to remove and trade with. So by having such a significant portion of our pool locked up, it's a really safe bet.
Yeah. I mean, that was one of the purposes of building it, is to make DeFi stronger.
Yeah.
As a whole, and when we were building it, it was like rug central on Uniswap. It's like 7 rugs a day or something. It was nuts.
It was horrible.
I was just getting disgusted with it. Just like, we got to fix this. We can build something that fixes this, that helps facilitate some sort of a band-aid on this horrible thing that's going on right now. And because it was 1, running up the gas fees, 2, wrecking people, making crypto seem shitty to new people getting in, and there's so much money to be made right now in crypto, and the fact that we have developers And in order to be a Solidity developer, you have to be a rather smart person. So that means that we have rather smart people out there that would rather spend their time making horrible contracts that wreck people instead of taking this opportunity and ushering in a new financial system. There's a lot of things that need to get built here. I don't know if people realize that the financial system in the world is collapsing around the world as we speak, pretty much. It's melting up, fiat printing everywhere, and people are worried about like making another 1 ETH or 2 ETH on like some horrible project. And I'm like, they'll get it one day. It's going to happen really quick. That's the thing.
Let's see if this works. So right here at the top of the screen, I'm showing some Uniswap statistics. Zendo says he got wrecked 20x leverage trading futures on Binance. Should have bought bond. Yeah. Like regular, Crypto says, like regular updates showing the sync price and reasons why. Examples of bullet point you can click around on the FRS, which explains totally honestly what happens. The positive moves the team made, etc. Oh, okay, like chart history of events. That'd be really cool for somebody to do. But we're busy building stuff, so we need people in the community to kind of like document our history and past like that, Yeah, like when XBTC invested 100K and stuff like that. Some kind of traceability to explain to new potential investors rather than taking a 30-minute look at a chart and moving on to the next one. I don't know. You look at a lot of small market cap coins and the charts all look the same to me. I got in 4 rugs last summer. Jeez. Oh man. If we look at this chart here, the fees earned on just the SyncETH liquidity position is $100,000. So that's split, that's the fees that are like in addition to the original liquidity that was there. If we look at like the Bitcoin ETH position, the fees earned is a lot lower. The chart will load here in a minute. But you can see the fees it steadily climbs every day. And it's not like this is magic money. These are fees from people using that liquidity.
Yeah, you're providing the service, so that was another big thing is, and this kind of goes into Crypto Joe's question here. He asks, how does the project get the money to provide sync rewards at CryptoBond maturity? What sort of payments do, say, Aave project, Aave ETH, or Uniswap DEX the team? I think it's
okay. I missed that one.
Where do the rewards come from, right? And first off, where does you have in Bitcoin, right? Let's just make it about other projects for a second, because there's inflation in other projects, and inflation, number one, in economics, is not a horrible thing. It's just it's the rate of inflation that is the important thing. So when you have a deflating system where there is no inflation, you should look this up. It's the velocity of money. You will slow the money supply to a crawl, because when people think that this happens in burn tokens, right? Where if you're incentivized to not trade it, nobody trades it. And then there's no liquidity, and people start to sell it. So normally you'll see a big pump, and then it's just death forever, because you're not incentivized to lose 10% on a burn on transact, right? So that's a net deflationary system. And now on an inflationary system like the US dollar, like Bitcoin, like Ethereum, it keeps the velocity of money going. Yes, Bitcoin has a finite supply, but it's inflating every 10 minutes. Right? The miners are doing computation, they're getting Bitcoin, and they're selling it on market to pay their electricity bills. So you're paying the people to transfer your transactions and then sell on your, just dump on your head. All right. And you're doing the same thing to the ETH miners, and that's why ETH 2.0 should be very successful if it works, because now you're not paying people to just dump on your head.
Yeah.
Right? You're paying people to hold and create more security in the network, more trust. So that's kind of where our inflation comes. Now, it's inflation that pays out these rewards, okay? Because you want to keep growing the supply. Now, in other projects, that inflation rate is an arbitrary number. It's arbitrary. You had one programmer or a few programmers that when they coded the project, they put in that inflation rate, right? In Bitcoin, it's every 10 minutes, you're going to have XYZ tokens come out, and as soon as the block is filled. So it's pretty, you know what the inflation rate of Bitcoin is. It's a little over 3.5%, right? Every year. Maybe a little bit less now, but it's right around that.
It's gone down significantly.
Yeah, I mean, in the first year it was like 1,000,000% inflation.
Well, it doubled every day.
Little to something very large, so it goes down every day, right? But it's still right around 3%. Now, you have other projects that have baked-in inflation, but they chose like, oh, we're going to make it 4% or whatever it is. When we were coming up with this, like the math behind this, it was important that there was nothing arbitrary in the code. We wanted it to be all supply and demand based, so that the users set the inflation rate. Okay, so if 80% of the token supply of Sync becomes locked, the reward rates that are offered will be driven into the ground. Okay, so that creates incentive. So as more people come into crypto bonds, the reward weights go down, thus lowering the overall inflation of the network, right? So that's why if there's only like 10% locked, it's okay to have it at 300%, because it's not 300% overall inflation of the currency. It's only 300% for a very small amount of people that are participating. So that they make all of the gains, and the people that were just holding the tokens didn't make anything. They're getting inflated away. So you might as well be in a crypto bond if you want to be in a long-term position, because now you're actually accruing that gain, okay? And you help support the network at the same time. So you're strengthening the network, you're strengthening the liquidity pool. If you even want to get out of the position and you want to sell it on the secondary market, you help the spot price. Because if I sold a crypto bond right now, I didn't touch the spot market. So now that your bags have a better price because no one's selling them down.
Yeah.
So if you want to sell Sync and get a position, you should be doing it on the secondary market, because it actually helps maintain the price.
I mean,
does that kind of make sense for everybody?
Yeah, dude. I mean, the whole velocity of money concept was heavily considered when creating this, because we looked at a lot of burn tokens. I mean, we studied a lot of burn tokens and looked at the what these economic models do, and specifically when it's a transactional burn. Oh, dude, what happens is the velocity of money just drops so fast. A friend of mine actually made a burn token, and he said, this is going to be great. The total supply is going to shrink. That was his idea, because theoretically your position would grow if you sat there and did nothing and let everybody else just destroy their coins. So what happens is everybody stops trading, and then the coin looks dead, and then everybody freaks out. And then they all dump their coins, and then everybody goes, why is everybody dumping? And it becomes a big dump fest.
Yeah, because, think about it, right? It's like...
Nobody wants that.
I don't want to say any names of tokens, so I'll just say there's a token out there that's a burn token that has a 10% burn on Transact. All right? First off, it's gotten rugged like 3 times from hacks. So I think a lot of you people know what I'm talking about. But anyways, they're onto like their version 4 or some bullshit. And yeah, it's like 10% burn on Transact. And it's like, okay, so you're saying if the token price goes up 20%, it's only up 10% for me, because I still have to sell and take a 10% loss because I'm going to burn 10% of... It's like, this is crazy. So now you have everybody that needs a much higher ROI just to sell to get a okay one. And once people figure that out, it just gets destroyed.
Wow, Roscoe makes a awesome point here. Like, this says it all. This is my gain since December on Sync bonded liquidity pairs. Components only open my eyes to all of the strategies with V2. With Wrap Bitcoin, ETH 119%, Sync ETH 151%, Dex ETH 803%, Link ETH 253%, AAPX ETH 2%. I mean, that one's new, right? I mean, we just added that a few weeks ago. USDC ETH 108%. I mean, yeah. And you can't get weak-handed.
Protecting your initial investment to a certain degree, it's a risk mitigation strategy that a lot of people don't have. with
Yeah,
the crypto bond,
it's
because
awesome and powerful.
you know if you don't know where tops are, you don't know how to look at any of this stuff. You don't know where tops, bottoms. You don't know what you're doing. Um, just sitting in something that protects to a certain degree your initial investment, which is a liquidity pool, and then yield farming the liquidity, the sync tokens, because you're providing liquidity. You're getting extra rewards, number one, but you're also protecting that initial investment far more than just saying, you know what, I think I'm going to buy Dogecoin today. Or whatever it is. It's like
You
eating in a single asset or a liquidity pool.
Yeah, you really do have to protect yourself from your emotions. I mean, everybody does. Anyone who says that, that they never emotionally trade or whatever, there's some sort of like freak of nature or sociopath or something, because
it's really hard.
You can't not tie emotions up into money, because if you think it's going to impact your livelihood, you've got too much invested. And then the bad thing is that if you don't, but you have managed to grow a significant amount, you do start to feel that way anyway, even if it's
And
not.
you don't want to lose it. I mean, I know a bunch of whales. Like, I know a shitload of whales. And they're not aping in, to every pump coin. They, like, the majority of their funds, they definitely have 8 bags. Don't get me wrong. A lot of these whales do. But the majority of their funds is in long-term passive income investments, because they don't want to lose that main bag. They want it to be protected as well as possible, diversified into passive income investments that earn, a couple hundred, couple $1,000 a week. And, they don't have to take some of this massive risk where it's like, all right, I'm going to get into this, put 50 ETH into this or whatever. It becomes risky. So their asset allocation, it's like when they ape into a coin, them aping in, it's like 1% or less of their stack, and a lot of people don't realize that should be probably, a lot of the strategies when you talk about coins is going in and testing the waters, making sure it's okay, especially on like these brand new projects that like just launched,
Oh yeah. Crypto Joe says, well, let me back up here. Ross, okay, I already read that one. Crypto Joe says, really good explanation. Can you speak of a deflationary example again? Any cryptos, good examples? Deflationary goes down in supply over time. So is that one factor that may increase the price?
You need to have more than just that aspect. It needs to have more than just a burn function. You need to be providing a service, right? That's pretty much just economics in general, because if you're not providing a service or a good, you're more than likely a Ponzi scheme. Okay. Or a pyramid, more than likely. So if your only thing is we burn on transact and it deflates, that's horrible. And you can look at a long list of tokens that got destroyed with those tokenomics. So this is where like ETH 2.0, there is a burn mechanic in there, but it's not just burn on transact. It's not just a burn on transact. It's burning a little bit of the gas fee to help make it more long-term sustainable from an inflation standpoint, which is okay because it's also doing other things like securing billions of dollars safely. That's a huge service, and transacting. So it actually has tangible value inside of it.
So, Crypto Bullseye. Oh yeah, that was a really good explanation. Crypto Bullseye says, "Can you talk about the history of crypto ape slang?" Well,
yeah, I think that. Go ahead.
Yeah, dude, aping in is kind of like a more recent word that I haven't really heard that until maybe even this year or the end of last year.
Within the last year.
Yeah, but to me, like the history of slang goes, way back. We had mining and underclocking and overclocking our cards, and for me, history
aping like 6 to 8 months ago. Everyone's using it.
Yeah, for me, history in crypto goes back a little bit longer than even slang words. For those of you who don't know, I've been mining Bitcoin since it was when it was the only currency. There was no altcoins when I first started. Then Litecoin came out, and when Charlie Lee forked it, these FPGA miners were rumored. Nobody really knew about them, and then ASICs came out, and GPU mining became like instantly like no good. What is your definition of ape? Isn't that the equivalent of going all in?
Going in hard, fast, without any research. That would be my definition of an ape. Would be someone that saw a meme and bought a bag, pretty much, or they saw that it was trending on Dex Tools, and without any research, looking at the website or anything, they just.
I don't recommend aping into anything, like
No.
like going all in. I think that's what I always hear people, the context that they use it in. I wouldn't recommend doing that, but people do. Yeah, just gambling based on a tweet.
Yeah. And hey,
people say
gamblers,
Elon's going to
lose money,
support
man.
Doge.
There's only like long-term holders make the most money in crypto. That's a fact. Out of like, if you're going to be a trader or a long-term holder, you are going to make an insane amount of money and probably be very wealthy if you were just a holder, long-term holder. If you were trading, you were going to wreck City more than likely. You know.
Crypto Joe says, cool, yeah. Do you think the Uniswap platform with time may decide concentrated liquidity is fundamentally flawed except for stable pairs? V2 better for majority of pairs, I think. I don't like NFT for LP. I don't really like the LP for your position because I thought when they described it, it would be a lot more flexible. But because it's so inflexible, it's more of a pain in the ass. It doesn't actually help. You just got to fiddle with your liquidity all the time. There's no passive income that you can earn from it. I do think that there are some platforms out there. We've been studying a lot of the AMM models. The PMM model, I think, is kind of like a Uniswap v2.5. It's better than 2 and better than 3. So, I don't think there's a perfect one out there.
Yeah, and there's other AMMs too. I mean, you have obviously Sushi, Balancer. Balancer's really cool. I'm interested to see with the V2 contract, the integration with Balancer. I'm not sure how much people know about it, but like you can, for a Balancer sig pool, right? If you go and trade, you can actually get even your gas fees refunded in BAL tokens. Just from trading on Balancer. Then if you provide liquidity on Balancer, you're getting paid out weekly in BAL rewards as well. So it doesn't auto compound your rewards, but you can get them paid out like weekly, which is pretty cool. So I'm interested to see when we integrate with the other dexes and the other chains, which is the most advantageous platform to be on. Oh man,
the Matrix is deteriorizing right in front of us.
Man. Oh no. Hold on a second.
While you're taking care of that, I'll read the next one. Crypto Cabo-chan says, please don't allow Sync to pass $12. My 9-year-old son is desperate for a monkey. I promised him he can have one if it hits $12. It depends on when he's moving out and growing up, but you better be careful. You may have to knuckle down and buy a monkey. Do you guys think that you can use that UniV3 trick you're talking about? Keeping the NFT and just reloading it so you don't have to pay the transaction cost of making the NFT. That's one of the things that I was exploring yesterday on paper. I was like, well, what if we bought 12 to 15 of these liquidity position NFTs for any given pair, and we could automatically pull the liquidity from one and put it into the next one if it's earning the most fees. The way that Ampleforth does like the rebase function, we could say that like maybe once an hour anyone could run the function and it would move the liquidity to the most profitable liquidity pair. And if it was staying within that channel and nobody needed to move it, nobody would have to run that function. Yo, he's back.
And I'm back.
He had to pop out of the Matrix for a second.
Yeah.
And so, yeah, that if you had like a deck of cards, a bunch of liquidity positions you could use and, fund this one and then pull it and then fund that one. But, you're going to lose a little bit in gas fees depending on how much you have, So you gotta have to limit how often you do that. If we're doing it by contract and all of the liquidity is moving around from one of these NFTs to the other NFT, potentially it could earn a lot more money than it costs in gas fees. With how much liquid assets we have, like in our AmpNet, for example, 100K in there, it'd be pretty easy to eclipse the gas fees every day. So once a day, rebalancing it, or almost like the Ample Fourth rebase, we could move it to a more profitable liquidity position. You could probably do that once a day and outrun it, but there may be some days where it just incurs a loss, Depends on gas prices, executing transactions by contract like that. Somebody's gonna have to pay the gas cost in it.
Yeah.
We all love paying gas fees, don't we?
Yeah, well, and let's talk about that for a second. I mean, V2 solves the gas fees, all right? Because if, for example, if we're on ETH and Polygon and Polkadot and BSC, right, now it's in my opinion that the high gas fees are it's going to be a product of where the economic energy is at that point in time. Right now, all of the economic energy, the majority of it, is on Ethereum.
Yeah.
Okay, so that's why the gas fees are so high, because everyone's actually using it. And when you move on to other chains, well, they're not being used right now, so they're less than a penny. So if everybody can move to, let's say, Polkadot, I think it's going to happen on Polkadot. I think it would happen on BSC. It's going to happen on Matic, or Polygon. Maybe not to the extent, but it will happen. So having the ability of being a multi-chain, where if you wanted to go mint a crypto bond and, you know what, ETH is going through the roof, gas is at 300 way, you know what, let's hop over to Polygon. Only cost me 30 cents to mint this right now.
See, Ant's pointing out gas on BSC is already going up. It used to be 20. It used to be 22 cents. It's at $7 now. It cost $5 to make a crypto bond when we launched.
Yeah.
Look at us now. I mean, it's just a consequence of the people being here.
And it's not just us. Like, look at other staking contracts.
It's all the same everywhere.
A crazy amount of money. Look at I had to send money yesterday to somebody, and it cost me $32 to send somebody money. I'll send like $3,000.
So when we used to, congratulations, we've received 100 messages today with Restream. Nice. We are on multiple platforms, guys. We're trying to get up on DLive and YouTube. We're having trouble with DLive and YouTube right now, so we're just on Twitch. But we're expanding our network and our reach.
Tron, gas still free.
Back in the day, when you were on,
still 90% centralized.
Yeah. Tron.
Yeah.
Yeah, Justin Sun centralized, dude.
Yeah,
back in the day, we used
owning everything. Okay, that's not me.
Back in the day, we used Litecoin to bypass the high, we call them transaction fees. That's still what they are. The transaction fees in Bitcoin. People in Bitcoin who actually use it, the freaking transaction fees in Bitcoin are insane. And if people actually used it as much as they were using Ethereum, it'd be even more insane. Ethereum's just not up there in market cap yet, but when it does, more money will be being transacted in Ethereum. I think it already is. And
I'm pretty sure.
And in Bitcoin, you've got
because it's all, like, most of the money is in Tether. Actually, it's Tether is the number one crypto, and it's an ERC20 token. Volume-wise, not number one market cap-wise, just volume-wise, it's Tether.
Yeah, if you look at like ETH as a platform, it vastly exceeds Bitcoin. If you look at Ethereum as just the token on Ethereum, It alone is exceeding Bitcoin in volume today. It's $68 billion versus Bitcoin only moving $60 billion. So if you added up all of the assets on the ETH chain combined, it blows away the amount of economic energy that's transacting on Bitcoin. Now,
Well,
the market cap just has to catch up to it.
I mean, and people aren't.
There's only 2.9%.
They're not thinking about like people, and this is why I get so frustrated because the opportunities for what could be built or is like basically waiting to be built in the crypto space is like a list that could cover my entire wall, like all the walls in my house of everything that should be built, right? And yet we still have Solidity developers copying hourglass contracts, and it's like, god damn, this doesn't make any sense to me. You have like, let's even segue this into the lending platform, right? So this is built now, right? And we're testing it now. This is a porting of traditional finance into crypto, okay? And I think the cool thing about it is, like, let's take Aave for example, right? Or you could take other lending platforms, for example, where most of them work in this type of model where you deposit collateral or a token, right? So let's say you had Ethereum, you deposit Ethereum, and then they'll give you a certain percentage of that back, right? As a quote unquote loan, right?
Yeah.
But you need to maintain the collateral to loan like maintenance level. So if you put in $1,000 worth of ETH and you got a $500 loan back, if the value of Ethereum drops token price, right? That means your collateral value drops as well. If your collateral value falls into a liquidation situation, you're liquidated. You didn't have any opportunity to pay it back. There was a flash crash on ETH, bang, you lost your collateral. Right? That's horrible. That's horrible because a lot of people don't even understand what that really means or how to protect themselves, or in a crashing situation, they don't have the funds to basically cover the collateral and they get liquidated, right? And then 24 hours later, the wick is bought up, and it's back to the point where they wouldn't have gotten liquidated. So it's a horrible type system, and you see that this is why margin trading platforms have this problem, because it's the same thing as it's the same type of mechanism that does this, and it's like this compounding liquidations. It has this effect, and that's why on like if you looked at like BitMEX versus like Bitstamp's charts, BitMEX has giant wicks because collateral value went down, they got liquidated, thus fueling the dumping. Whereas you don't see that on Bitstamp as hard because they don't have margin trading, and margin trading is just lending, right? So with our system, right, you take a crypto bond, all right, let's say its current value is $10,000, matures in a month, right? Just throwing out scenarios here. The person, you can place a term, so okay, I have this is my collateral, I want to put it up for collateral, and then you say this, what do I want, what will I accept? Okay, I'll accept $6,000 in ETH for 14 days, whatever, and you put it out there to the system. And now anybody that's on the system can see that you're looking for X loan for X time, and this is your collateral, right? They can then come back and say, all right, well, I like this bond, I think it's good collateral, but I'm only going to give you $5K for it. And it's going to be 14 days, and I want X amount back. All right, now in that time duration from when you got your loan, let's say that crypto bond, because ETH crashes, let's say ETH does a horrible crash right now, unforeseen. If you were in another platform, you would have gotten liquidated with no opportunity to pay that back. But with ours, the only thing that can liquidate you is if you don't pay back your loan exactly what you got. It's not about the collateral to loan value. It's a far superior system. It makes the users far more empowered, especially users that are newer to a crypto space and they don't understand margin maintenance levels and all this stuff. It's too complicated for other people. So it's just, I got 5K. They said I need to pay 5,500 back in 30 days. I did it. You keep your collateral. Simple, very simple. You don't pay it back, you lose it, right?
Yeah.
It's less complicated, and the best thing about it is, so that is when a lender facilitates a loan, they actually receive back another NFT with the loan terms, and it's basically saying that you own the debt, you own the rights to foreclose on this collateral.
I'll be right back.
As a lender, you can sell that to somebody else. Yeah, that's fine. So since there's a back and forth process that needs to take place between a borrower and a lender, and that process might not be instantaneous because maybe they don't agree right away on the collateral value and what they're willing to pay out on it. What I think is probably going to happen, and it has the ability to happen, is you'll have people that are market makers that are giving out loans and finding, basically securing these loans, and then they'll turn around and sell that to somebody else that just wants to hold the debt and is willing to just take more of a risk. So it's like, oh, I sold this loan for 5%, bang, you turn it around and sell it for a 2% profit. You take no risk, you take the spread, somebody else holds the debt note, that person now owes, the debtor now owes that lender back, a different person. And the thing is, we can use the collateral notes, the debt notes as collateral as well, which if in that situation, you're talking derivatives, if that makes sense, because you can stack debt on top of debt that's all over collateralized. So it's taking the biggest market in the world, which is the bond and debt trading market, and lending out on that type of debt, and it's porting it directly into DeFi. It's incredible. So,
Merging footwork. What's up, man? We got merging footwork in here. Let's see, I had to step away for just a second, so I'm kind of catching back up here. Pure greatness. Hi, what do you think about Shiba and Doge Elon Mars? Its tokens have not really products, but have high volume trading. I think they've been kind of wrecked.
Yeah, I think we talked about it. That was like the first thing we talked
about.
Yeah,
you missed the early combo. Yeah, the Master Chad Rugger.
Yeah, the Master Chad.
The Master Chad. What do they call him? The Chad Lord?
Chad Lord.
Literally invents Ethereum.
By a dude that just wears kitten shirts. Just like...
What was it? Vitalik... someone accused Vitalik of building Ethereum for one sole purpose: to steal Bitcoin. Ethereum is a scam to steal Bitcoin. Sync is going to change the world, man. Sync or die trying.
You can't build on Bitcoin. That's the thing. You can't build on Bitcoin.
Not easy.
Can you build all these financial products and these decentralized finance on Bitcoin? No. Can you put mortgages on Bitcoin? No. Can you put insurance policies on Bitcoin? No. That's why it's not done yet, and that's why it will never be done yet. It will never be done because it's not going to happen. It's going to happen on ETH. It might happen on a couple other chains, but yeah, they had the ability. I think they have the ability to do smart contracts, and they said no.
Well, yes, Satoshi actually made the first smart contract ability called colored coins in Bitcoin, and then he disabled it, saying that the security risk wasn't worth the time it would take to flesh all that out. He just wanted to get the coin out there. And Vitalik basically turned those functions back on and fleshed them out. He designed the protocol. But like Tether and Omnicoin were on Bitcoin first. Tether used to be on the actual Bitcoin chain, and they took it off because it ran like dog shit.
Yeah, it's awful. And, it depends on what your goal is, because, I see some people are like, oh, that was a bad idea. And no, I don't think it was a bad idea, because it made Bitcoin what it is, which is probably the most secure cryptocurrency in the world. And it's immutable. It's censorship resistant to the max.
It's
And the problem
decentralized.
is, like, when you introduce smart contracts, okay, this is another reason why we chose Ethereum, and it's going to sound really weird when I say this, but it'll make sense. I wanted to develop on Ethereum because hundreds of millions of dollars have been lost on Ethereum to bugs, which means that enough people lost enough money to figure out the bugs and not write code like that anymore. So you had enough mistakes found, which cost a lot of money, and now we don't know where the bugs are on all these other chains yet. So that's the other thing with ETH. It's securing billions of dollars for years, safely and securely. And with the smart contract, you can program yourselves a coffin.
Yeah, the devil you know is better than the devil you don't. Right?
Yes.
So, I mean, with all of the things that are going on with Ethereum, yeah, there's a lot of problems, but there's been a lot of solutions so far. And when you look at something like Binance, hey, Jin Fly Live, what's up? Got merging footwork in here too with how much do you think it will cost to create bonds on other platforms roughly? You look at the gas price on them, figure out how much data that is to store. It's going to be different per platform, but with like Binance Smart Chain, it's probably going to cost $25 per crypto bond to make. Right now, by the time we would get everything deployed over there, it could be a couple $100. The amount of adoption on BSC is so high right now, and it's just going to. I mean, it's based off Ethereum, right? So in theory, if everyone on Ethereum went over to BSC, you would literally have all of the same problems, plus the problem that it's centralized through Binance. If you look at Tron, which was brought up earlier, and somebody wanted me to circle back on, Tron, it technically works, but it's a copy of Ethereum. Don't kid yourself. It's nothing special. It is literally what Binance Smart Chain was kind of a copy of. They're all copying each other. They're copying Ethereum. They put it on
TRC20. It's like
TRC20. They put it on less servers. They don't they centralize it heavily so that they can speed everything up, and the server requirements are a lot higher than they are for Ethereum. They're higher for a reason. They turned up the throughput numbers to the maximum. So to run like a Binance Smart Chain server, it takes like a 2 CPU, 24 core Xeon processor with like 300 gigs of RAM and a gigabit Ethernet connection backbone to all of the other servers, because they have to and they use all the bandwidth. I mean, they use it all. Well, Ethereum can be ran in your house. It can be ran down the street by some kid, all supporting the network, and it is truly decentralized, and it works reliably. I mean, if 12 servers die,
of uncertainty in the world, right? We have what it looks like we're going to get some sort of mass adoption. It looks like it's starting. Finally, we have institutions coming in. We have a lot of people. There's a lot of hype, but I wonder if at some point, if this gets to so big that it's actually where the governments are feeling challenged, and then if you're centralized and they can just come in and put a gun to your head and say, turn off your server, Binance, or we're going to kill you. Do you think they're going to keep the server up?
Well, if your cryptocurrency relies on 12 core servers,
Huge problem. So it's all fun and games when things are working great and everyone's getting along, but then you can see that that can change very quickly. Very quickly.
Oh, yeah. I mean, when you look at Tron or Binance, if you have a dozen servers that run the entire network, it's dangerous. Your funds are not safe, right? I mean, if you look at Ethereum with over 6,000 servers running it, and you look at Binance Smart Chain that has 12.
Yeah, your funds are safe. Yeah.
Your funds are safe. How much liquidity is out there? Approximately with holders 75% locked. I'm not sure what the full question there is. What about ADA? Is it centralized? ADA is great. It is somewhat centralized. It has more servers, but they are delegated out, so it's kind of the same thing. but their smart contract language isn't fully ready yet.
Yeah, they're
Right?
not fully launched.
So
Yeah.
right now they're like Bitcoin on speed. Now,
I mean, and there's a couple other chains that are looking pretty promising as well. Ones that aren't necessarily mainstream hype chains right now that I think, from a tech standpoint, are probably going to blow a lot of these chains out of the water.
yeah, because you look at the 2021 release chains like Solana and Chia, and
Chia.
it's amazing what is coming out. What these guys are working on is mind blowing, right?
Yeah.
And I know most of you in here probably haven't even heard of Chia, but you should go give it a check out. It's something that you can mine on your hard drive, and
Yeah, CPU mine it. Yeah.
someday people are going to be saying, "I wish I bought Chia like back when it first launched." They don't have a smart contract language fully launched yet, but it's already written. So it's going to be released soon. You can already launch tokens on their chain, and it's only a couple of weeks old. And so,
Yeah.
once that gets more adoption, the problem is, like, I looked into developing on it, and it uses a different language that I'm not familiar with. It's called Lisp. I'm sure there's a ton of Lisp developers out there. One of my friends I went to school with is a Lisp developer for, the number one bank. Yeah, CHIA. It's technology-wise, it was developed by Bram Cohen in cooperation with Stanford University. And Viberblah did a video on setting up a Chia miner with a Threadripper. Nice SSDs. Yeah, it will destroy your SSDs. It wears them out extremely fast. You need one for a temporary drive, and then you just, your temporary drive is a throwaway drive basically. But it's super unproven. We don't know how it's going to go in the next year. We'll see. But with their transactions and throughput and their proof of work that they have, it's pretty amazing. Do you guys have any plans or ideas for future projects?
Love this.
Yes, dude.
I love this question, man. But no, man, this is a network, right? So that's why it's called network, right? Sync network, because it's always been far bigger than what you guys see. We released a fully working product to the community. It works perfectly, and it wasn't an IOU, right? But we called it a network because we knew that when we were building this, that there's a lot of other things that are going to be able to be plugged into this, like the lending platform, which is a creation of an entire debt market and derivatives market in one, which kind of leads itself to almost like an index kind of type product as well. But there's a lot of things that we have in our heads, and the good thing is I have these great developers, Frankie and Cryptogenic here, and they've been able to build pretty much everything that I've thrown at them, and that we've come up with. I get these crazy ideas in the middle of the night. I'll call it Genix at 3 a.m. Dude, you got to hear this right now. This is important, and then they put it into action. So it's really cool that we can come up with these ideas, and then inside of just a few months, Sync it wasn't crazy long development because we have really good devs. How many other projects have you guys gotten into where they're still building? You got into an OTC, or you bought right at launch, and it's been a year, and they still only have a website. I could think of like a bunch, and we had an idea, built it, got it to market under 6 months, already building a V2, putting on another platform for adding features like lending, borrowing, debt markets. Did ADX off the ground. I don't know. What more do you want? I don't know. Our name isn't Doggy Coin. Is that it? I don't know. It's multi-dex, multi-chain.
Oh, thank you. Yeah, she says we've done a good job. Great team. Yeah, dude. Thank you, Jen Fly Live. The brain. Jackie Sparrow says, guys, do you play sports in your spare time? And if so, how? Well, I like to go hiking and get a little outdoor exercise. I subscribe to the mantra like healthy brain, healthy body. They go together. So, you have to exercise and get a little work. That way you can focus and plow through these coding sessions. They can really wreck your mind sometimes. But at the same time, I'm kind of addicted to it. I'm kind of addicted to the difficulty and overcoming it. It's like that dopamine rush you get when you finally solve a complex problem. It feels so good. It's like solving a really hard puzzle. The harder the puzzle is, the better the satisfaction you get afterwards.
That's me too, man. I love creating. Well, first off, like creating anything is awesome. I'm pretty huge into fitness. Not as much as I was even just a few years ago. I know this is probably going to surprise people. I used to be like a monster bodybuilder, like almost 250 pounds, like enormous. So fitness has always been something great. Being active, playing sports. My son, he's been getting into hockey, so every day after I pick him up, I'm playing hockey in the driveway for a little bit. That's nice. But just staying active. But yeah, definitely.
Oh yeah.
I don't work out as much though, because I broke my leg from running. Now my leg just kills me all the time. So.
Yeah, I suck at running.
It's the worst thing in the world. It's horrible.
But I'm pretty good at hiking.
Yeah, hiking's awesome.
I can hike and I can climb mountains really well.
And you got some pretty good mountains out where you are. Good views.
Yeah, a lot of cliffs, a lot of bouldering, things like that.
I have this mountain. It's pretty close to where I live. That it looks like
It goes woof.
Oh, it's like it looks like an entire, like from an aerial shot. It looks like a giant that was like a mile long, just laid down. And from an aerial shot, you can see the head, the neck, the chest, the 2 legs, 2 arms, 2 hands. It's nuts. And they actually put a castle at the top of it, right at the top of the belly button. I went hiking up there hundreds of times throughout my life. Love that stuff.
Dude, that's cool. You should mountain bike. Gold Crypto.
What'd you say?
He said you should go mountain biking. I used to do a lot of mountain biking, and the deeper you get into that sport, the more expensive it gets.
I never actually lived in New York City.
Cabo Chan.
Yeah, I just commuted there every day.
Crypto Cabo Chan.
I'm about like 100 miles away from New York. Actually, yeah, it's a 100-mile commute pretty much each way. Well, there is that goal.
We're all millionaires. No, not a millionaire.
I mean, here's the thing.
I'm a millionaire in something.
It's in something, right? Right? It depends on what you want to be a millionaire in, right? I would be so afraid to hold $1 million in cash. Just because, not hold it physically, but like hold it in cash. That would terrify the shit out of me. Like, I wouldn't want to hold it in cash.
No.
I would immediately put it into crypto. Yeah.
Yeah, with all the talk about hyperinflation and Warren Buffett, I don't know. I mean, I have mixed feelings on Warren Buffett as it is. He thinks crypto is a scam. He's very intelligent with money, but he's kind of like a one-trick pony, right? He invests in products that people need and are essential, and he knows that the demand's going to climb and go up.
He's also made a career of stripping companies, buying them and stripping them down, selling their assets. So
yeah, it's not very nice.
That's
You look at Berkshire Hathaway, and Berkshire Hathaway started as a textile company. They made clothing. They don't make clothing anymore. It's just an investment company. How do you make that leap? He bought a textile company that was going out of business, and to prove his point that it wasn't a bad investment, he merged his investment company, with them to keep that name and that corporation alive, just to prove that company didn't die. Kind of a dick move. Kind of a dumb move.
Should I sell all my stonks?
Up
to you, man.
If you have stonks token, Whatever happened to that? Do you remember Stonks?
It's a burn token, man. It got wrecked. Like,
I forgot it existed for a second.
let me look it up, man.
Jackie
I
Sparrow,
remember
nice
that.
AMA.
Stonks and Terra.
When it comes to sync, we're a long-term project, so it's kind of like what Warren Buffett would look for in a crypto company if he was looking at crypto companies, right? He looks at like products that are addictive, products that have a long shelf life that people need, that add value. Those are the things that we tried to build up, as opposed to like, look at our killer tokenomics that.
There's your proof on burn tokens. That's Stonks.
Stonks, I haven't looked at that in so long.
Yeah, wrecked, death. Slow, long death. What did I tell you guys? All right? These are not good tokenomics. They seem good, but they're horrible, and you're going to get wrecked if you think like this. I don't want people to get wrecked, all right? I want to educate people, make them smarter, all right?
See, nobody wants to trade them, so you get these big, long, like, doldrums of no activity, right?
Yeah.
Because everybody's holding and not doing anything.
Velocity of money. That's right there. That's what velocity of money. Decreasing, declining.
Speaking of velocity of money, that's one of the things that we look at when vetting a new liquidity pair or a partner. Let's talk about partnerships for a little bit, because we're developing a new partnership tier program, right? And that I don't have the information in front of me, but we have a very comprehensive product launch that we're working on with that. With our new partnership tiers, basically we're going to have like levels of integration between our partners and us, and they can choose how deep down the rabbit hole they want to go. With AmpNet, they went pretty deep. They went for the artwork. They offered rewards to their users for making crypto bonds. That's like a full send, really synergetic partnership. Whereas like some others basically just added the token and that's it. But, up until now, we've had to like actually work out the details of the partnership with each partner. We're going to be formalizing that process so we can onboard partners faster, add more liquidity pairs, and velocity of money is actually one of the things that we're looking at. It's one of the things why we've always shied away from burn tokens. Besides the high slippage and that messing with our contract, burn tokens have a low velocity of money because people don't want to incur those fees, so they don't just actively trade it back and forth willy-nilly, because they have to make an excess of 10%. If there's a 10% burn fee, an additional transaction fee, they're going to have to make more than 15% after you calculate in the gas fee and the Uniswap fees, most likely, just to be able to trade that and make a profit. So nobody wants to trade, so the velocity drops to zero. But if you have a token that has lots of active traders, they're making money on their trades or getting in and out of their positions. Liquidity providers make a lot more money because even though they're charging a very small fee, because there's more people there trading more often, those fees are like trickling down to the liquidity providers. So when we're looking for a partner, we're looking for a token that's going to have high volume trading, lots of trades all the time, because that's where liquidity providers make their bread and butter. From burn tokens, they're not going to get that. More positive, guys. Season NFT starting coming. Yeah. Have you contacted the TrustSwap team after finding out that they have a requirement or desire to store? Can you expand on that question a little bit? I'm not sure what you mean about requirement, desire to store. Scott, check the Discord.
Yeah.
Store funds. Crypto Kabachan. Moloch, can you publish the requirements for your partnership? We will have it fully published and readable on the website for everybody to see. Great explanation on the velocity of money. I never knew this about burn tax coins. Yeah, that's an unfortunate side effect of burn. In theory, it sounds great because you think, hey, I can sit here and hold my bag while everyone else burns their tokens. Well, everyone else is going to think the same thing. So nobody's going to be trading their coins.
People think that like inflation is bad. Inflation isn't bad. It's rampant, out of control inflation that's bad. Regular inflation is healthy. So it's like when they think that people think inflation, they think hyperinflation. That's horrible. That's also horrible.
A perfect example.
So they instantly think that. So they think that deflation would be good, but it's just not. It's not.
Here's the perfect
So,
example. Like, I know Ample gets a lot of shit, but if you look at Ample, as their market cap rose, their coins inflated in your wallet and everybody got more tokens. So people would sell their tokens thinking, wow, I made a good profit. But then more people would buy in because they saw the price going up, and then the market cap would go up, and then everybody felt bad and dumb for selling their position, and then they bought back in, and the market cap just kept climbing until they were like a top 10 token for a while before their algorithm finally flipped and they turned into a burn token, a deflationary token. And when people started losing funds, the exact opposite of what happened on the way up happened, right? We're like the good half of Ample, where as long as it's inflating, people get higher, feel bad for selling their tokens, so they buy back in and they buy it back more. That's a growth model, right? People,
yeah,
your coin becomes desirable. It's counterintuitive, is what they call it, right? A burn token, you think everybody would want it, but in reality, they don't, because it hurts you to transact in it. Whereas with our token, we're like the good half of what drove Ample up to the top. Once people start seeing that, and if they feel bad for selling their tokens and watching it go up and feeling like they're getting left behind, they're going to want to buy back more. That's going to attract more people, and we're going to grow as a network.
yeah.
Question for
And now, so I have these tiers, right? So we have 3 tiers: just basic, pro, plus tier, and I can't. I didn't. I'm not sure if you said this already, but
It's okay.
for a basic tier 1 crypto bond waitlisting partnership, any person from the community, or any person at all, can apply for that. So if you are holding XYZ token, whatever token, right, and you want to see it whitelisted for crypto bond creation, well, first off, it needs to be an ERC20, right? It needs to be on Uniswap.
Has to be on. Has to be on Uniswap. Has to
It
meet.
has to be on Uniswap. It can't be something that's a different chain that doesn't have a bridge.
It
Right?
has to meet all of our criteria, of course.
Right, and there's some requirements. We'll put that. We'll have that information for you guys, so you know that when you go to fill out this form. But you're going to be able to request, as a community member, listing on anything, and it'll be like a quick little 24-hour review, a couple little things we need to check out, and then we'll go ahead and if everything works, we'll list it. Right now, these will not get these tier 1 listings aren't. They're not going to have any custom crypto bond artwork, but it'll be the regular crypto bond artwork with, obviously with the icons, with those tokens available. And then as the tiers move up, tier 2, now it's an actual partnership with the project. We're having our artists create artwork for them. It'll be dynamic, trillions of combinations, just like we did with tag, swap, Antnet, stuff like that. And then, so there's multiple levels, but I think for the community, it's that tier 1 level. I'm sure that a lot of you guys and girls have more than just sync tokens and sync bags. So if you're holding other bags that we don't have whitelisted, this is for you. This is your opportunity to go in, apply, try to strengthen that liquidity pool with crypto bonds, because obviously if that liquidity pool becomes stronger, price stability comes, and it's better for you. So
Yeah, I really am fascinated about the counterintuitive nature of crypto and burn tokens and inflationary tokens. I would say that until people see the price go up to an insane amount, let me backtrack a little bit. On Ampleforth, for example, like when I was talking about that earlier, the project started inflating in price and people didn't understand the project at all. And they just jumped in with everything that they had because they wanted to ride that train. Mm-hmm. Of course, when the party ended, it was pretty ugly for all the people who bought in at the top, because everybody dumped.
Yeah, you didn't get just get wrecked from $4 to
$1
60 something cents. It was you rebased as you were getting wrecked. So you got really screwed if you put the top on Ample.
So we got 2 questions up. First one from Moloch. He says, I don't think burn tokens are bad if they have an actual product and a reason to hold the token itself instead of just making money. Yeah, if there's
Yes.
if there's a reason that would cause you to actually forego that token burn on transact to use it for something, that would be pretty cool. I have not really seen one yet. Not to say that there's not one out there. It just hasn't come across my desk.
ETH, I mean, like, the theory on ETH 2.0 is that is a good function to have. A small burn on transact from the actual gas fee. That's good because you were already going to lose the gas fee no matter what to the miners. So now just a little bit less goes to the well, now it's going to be stakeholders, but right now you lose your gas fee anyways. You never get it back. Well, unless you apply for a refund and get it, on sync. But you were already losing the gas fee. So now if it's lost or goes to somebody else, but you burn part of it, and there's still all this other functionality of Ethereum and what it can do. Well, yeah, that makes sense because it keeps the velocity of money up, keeps people wanting to move it and transaction it. I think the only thing that we were saying is if you have a sole purpose of the token is to just burn on transaction, like a lot of these, it's horrible.
Yeah. I agree. How does the temporary sync burned on making, say, a massive crypto bond affect price directly at all, or is it indirect? Less bags available to sell. So it drives the market. It doesn't drive the price up, but it drives the market cap up, right? By removing coins from the total supply, that affects interest rates on other people trying to make crypto bonds. So every time you burn more sync, they're not going to have as much opportunity to create crypto bonds as the previous people who created crypto bonds. So it's
it can drive price up though, right? Because if it's not the burning of the tokens that drives the price up, it's the scarcity, right? So when let's say you make a 3-year crypto bond, well, those tokens they're not able to be sold on the spot market for a minimum of 3 years now. Simple as that. So now you reduce the supply for 3 years by that amount, and now there's less tokens overall for other people to buy. So it's a scarcity thing. So that's how it drives token price. And then as sync comes back into the market, the interest rates are driven up, the reward rates are driven up, which then creates an incentive to relock for a long period of time and ebb and flow, if that makes sense.
Oh, we got a new partners page. Nice. Sink or die trying. Okay, you want me to show this on the stream, huh? Very nice. Join the growing sync network. Let me get this up for you guys. And we'll cover our heads up just a little bit to show everybody.
Wow, these guys are just going after it in the background when we're on
Yeah.
stream. This is awesome. We have a great team.
Yeah.
We have a great team.
Ant, everybody. Good job, Ant. Ninja. Ant and Ninja have been doing just a really great work, man. I can't sing the praises high enough. All of the team.
If you can show this off for a minute, I gotta hit the be back in a second.
Okay. Here. I'm just gonna take his spot. There we go. You guys can see this now, right? Ant the bomb. Great cheers. Early crypto bonds were the best. Can I borrow a DeLorean to go back to them? I'm telling you, man. That's pretty cool that artwork's gone now, right? And every time someone matures those bonds, there's less of them. So they're like becoming more rare all the time. And, the longer that people hold them, the more they become intrinsically worth, right? Because some people locked up like whole ETH in them and stuff. And, they were only $300 or $400 back when they made them. And now they're worth like over $5,000 or more, actually a lot more than that. Some of them are worth $10,000. And that's not counting like the rare artwork on it. $3.48 million locked in total liquidity. 1,617 crypto bonds created. That's pretty nutty. And 4 professional partners onboarded so far. and a lot more to come. Oh, nice. This is new to me. I haven't actually seen this website. These guys made this. I'm sure Ninja had a big part in this. Unchained Ninja, everybody. He's probably not awake or here right now. He's across the world, man. Sync Network awaits you. Simply lock in liquidity or go for the pro packages and get a customized CryptoBond NFT artwork and the whole marketing package on top. Oh yeah, this is so cool for our partners. They look at the CryptoBond artwork and they're like, okay, it's better than buying a banner ad somewhere. Oh, I can hear Scott's in the background. My music restarted. Can you guys hear the music, by the way? Or is that only me? Yeah, we got our 3 tiers, Pro Plus, marketing initiatives, reward your users with your own tokens. Yeah, that's what AmpNet did. So they're like definitely at least tier 2, probably tier 3. Partnership with additional features or use cases, customized bond artwork. We have a new partnership coming up. Oh, Scott's back. Let's go back.
I'm Blockhead now, more than I was before.
The music is on. Nice. The customized artwork, we're finishing up some right now for one of our partnerships we announced a while back. It's the mural project with their paint token. And we're doing something a little bit deeper with them. We're actually going to be integrating their NFT artwork into our NFT artwork. And when you create
That's really cool.
When you create one of these crypto bonds, it's going to have customized artwork that we've made, plus their artwork's going to be incorporated into that. It's actually really cool. Is the reward for all 3 partnerships or only for the pro tier? It depends on the partner, right? So for like AmpNet, they're rewarding tokens to their users from their supply. So that's just them. TrustSwap didn't do that. They didn't have the funds for it. Hey, Scott, can you take over for a minute? I got to go answer the door.
Yeah, do you think?
All right. I'll be right back.
So, yeah, the Mural partnership is awesome. I really got to hand it to the devs on this one because when I explained to Frankie what we wanted, he was like, "You got to be kidding me. Really? Really? You just need to make my life difficult like that?" Okay, thanks, Scott. I appreciate it. He was definitely not happy because it's a pain in the butt to do. But yeah, we'll be pulling in it, and it's a really awesome dynamic scene. And every time you generate a crypto bond, it's going to call out to their contract, and it's going to get that active state. It's not the whole image either. It will be in the image, so it's pretty cool. Now, we have a couple other partnerships we've been working on as well. A few of them are in the works. I'm probably going to be announcing. We have 2 other ones that we're working on right now, and the artist is just getting started on one of them right now. I think we're going to announce those pretty soon, and that'll be pretty good because this next project that we're going to be announcing, it has some pretty cool possibilities for crowdfunding and almost like securities crowdfunding. So I'm interested in that, and see how that goes. But like I said, the artist is getting started on that, so that's just a few weeks off because, as you can tell, our artwork is very in depth. It's definitely not just thrown together. So, and other than that, I mean, I'm really looking forward to this lending platform. To me, this is really. I always thought that like Sync is. The token itself could be huge because of what the utility what it's actually being used for, but the secondary market, I've always thought would be far bigger overall than Sync itself, because you're able to not affect the spot price of these assets. So if you're holding bags and you also want to trade them, you should be trying to trade them in crypto bonds. All right. Because if you're not selling all of your bag and you still have a hodl position in it, Why would you want to sell down a bag you're hodling, right? Doesn't make sense. You're going to want to do it on the secondary market. The secondary market allows for derivatives to come into play for the transfer trading of debt. All right, this is over $100 trillion market, and we're the only project that's directly porting it into DeFi. DeFi. All right, no centralization, no one can turn it off. It's immutable, it's censorship resistant. This is what you want. And don't you want $100+ trillion market potential to be ported into this project? Because that's what we've created. You know.
Crypto Caban says, Crypto Cabo-chan. Sorry, I got your name wrong again. Would it be possible to collab with a musician? So a limited edition bond had both artwork and their influence, but also music attached to the bond, possible or not. We did experiment adding sound to Alexandra's artwork. It's got some sound, it's not music.
You can hear the bull breathing in Alexandra's artwork, which is pretty cool. But yes, which it's possible to do sounds, so it's possible to do
music.
It's all possible, and I mean, it's really just scratching the surface of what you can do with NFTs. I think that was kind of the biggest thing with us was I looked at NFTs, and when we first started thinking about how to design this and code it, it was at first it was an ERC of an ERC and a stake of a stake and doing it that way, and then it came into the NFT kind of discussions, and then we were looking at how NFTs were being used before, and I'm like, this to me is crazy that these have been being used for cats and like digital drawings. This is hardcore financial software. We could do a million things with this, and no one's doing it. They're talking about crypto kitties or crypto punks, and I'm like,
Alpacas.
The underlying tech here is so much more powerful. It's more powerful than the current market of regular tokens because you can create derivatives. All right, people don't understand. I guess a lot of people don't understand why that's so important. But just spot market trading, like think about this. This is what you've had in crypto the entire time until very recently. You've had spot market and margin trading platforms or futures platforms, and the futures heavily affect the spot market. Okay. So here's what happens. Everybody buys a bag and the price goes up, right? And then when there's no more buyers, people start to sell. Well, there's only one market to sell on, so they have to sell on the same market that they bought on. So all of the economic energy that went into it has to come out of it, right? When people take profit. You need a way to port that economic energy outside of the system and transfer it so it doesn't affect the system anymore. And this is why in traditional finance, the bond market and debt markets are far bigger than the underlying markets that they're actually built on.
Yeah, I mean, that's insane, dude. That's absolutely mind-boggling what could be done with the derivatives market. Our lending platform,
The release date, it's set for June 22nd right now. Yes.
Yeah, Jackie, that's our target date. We have to test everything, make sure it's all going to work. We wouldn't release something that was broken. The Uniswap was kind of a flop launch. There was a lot of bugs in that. I'd like to avoid that if at all possible.
They had that hard date and they were going to stick to it, but then you had that hard date caused a lot of money to get locked up. And just imagine if you were one of the first people to dip your toes into a liquidity pool, and even if it was a small portion of your stack, but if it was 100K or something, and then you couldn't withdraw for a week, you'd be terrified. So we don't want people to be terrified. We want people to be very happy. So I'd rather robustly test something versus.
So stupid.
I think we're pretty good for the date right now. We have a working product. It's just test it in every possible way. Try to break it. That's the biggest important. Almost try to break it.
We're still finding a lot of bugs right now, and we're ironing them all out as they come up. We've had. It was kind of weird. Maybe it was an Infura bug, but there was a MetaMask problem. It was affecting our lending platform while it was under development. It was affecting our actual website. It was affecting Uniswap. It was affecting Zapper. Anything that was trying to do like gas calculations went totally wacko the other day. When gas goes up over 400 gwei, a lot of the dApps aren't tested for gas being that high, and so a lot of the little rounding errors that don't happen in the small numbers definitely go haywire in the bigger numbers. We've seen that across the board.
Mm-hmm.
Now, where were we?
It's things that you can't necessarily plan for because you don't. I don't think anybody knew that as ETH was pumping to all-time high that we were going to have a doggy coin madness Bitcoin session,
Yeah.
and that was going to come about in crypto. Like, if you were sitting there listening to this stream and said, "I called it," bullshit. Like,
who saw the dogs coming for real, right?
Stop it. Yeah, no, that was crazy. I remember when Elon first tweeted about it. I was like I was laying in bed in Antigua, and I just started laughing. I was like, "You can't make this shit up!" Like, and he tweeted about Doge, and that's what started it all. And I'm like,
he is a pretty good marketer, really, though. I mean, labeling his cars the Model S, the Model 3, and the Model X, so that across all of the cars it spells sex. I mean, that's sex sells is what he said, and he's right. He's been selling a lot. I heard that recently that their most of their profits actually come from like government subsidies on their cars and the energy taxes that they get some sort of benefit from that, and that's why they're actually so profitable.
They're not a profitable company selling cars.
No, but with the government subsidies, they are. They're extremely profitable, milking the government.
Right. Yeah, of course.
So but at the same time, you look at all the marketing he's done. It's worked out like really well for them, and in our own marketing, we're wanting people to join the Syncronauts, right? So we formed like an internal team. This is something I really wanted to talk about today on stream. This man is a walking alien brain. We have an internal team. It's not really like us. It's community driven, of people trying to spread the word for Sync and get it out there in a responsible way that's not spammy or scammy or anything like that, but that actually touches all the different rooms of DeFi. And if you're interested in joining the Syncronauts, I'm only going to talk about it this short time during the stream. If you want to join the Syncronauts, you have to ask to be let into the secret group. We don't know what the requirements will be in the future, but they're going to be pretty lax now, and they're just going to get more and more stringent. There may be even a requirement that you have to hold like 100,000 sync or more just to get in. So if you guys want to be a part of that, ask Ant, Ninja, me, Scott, or Gold.
And it's simple things. It's like simple things. Like, for all 25 of you that are in this room right now, how many of you have retweeted this stream? Because like if you're in this room right now, you more than likely are holding sync tokens, right? So we can tweet out as much as we want, but people want to see other people in the community showing the same amount of interest because we're biased, man. We're founders.
That's
of course
right.
We think this is hot shit. It's like so.
Get the word out there.
We got to get the word out.
Could you tell?
I have 3 Twitters. Let's go.
Nice. Emerging footwork, man. He's always there. He's always got our back. Crypto Cabo-chan. Could you tell the story of the Wall Street mathematician who helped develop the dynamic interest rates? And before we go any further, Crypto Joe also said one-sided reason for him funding Bitcoin is that the Biden administration has a large fund of grants for companies using green zero carbon energy utilization. Bad luck if Tesla isn't a dirty coal Bitcoin, even though it's greener than gold.
Even though, which is crazy because even though the main producer of electricity in the United States isn't clean energy, it's fossil fuels. And you lose efficiency when you take energy from one state to a next, like from a fossil fuel, and you turn a generator and you generate electricity. It's less efficient. You're actually costing the planet more greenhouse gas by driving a Tesla right now in the United States. Okay? It's you are being marketed to. Unless the U.S. goes to over a massive, or not just the U.S., anywhere in the world becomes nuclear powered or just a different form of energy consumption.
EPA grants.
Like you're hurting the planet more right now. Like
Synth asked, will people be removed from the Synchronauts once the requirements come in? No, they'll be grandfathered in. So if you want to get into this elite group, you know, we're very picky about who we let in on it. And we're not going to talk about it very much other than in the middle of really long streams. We've been on stream for an hour and 10 minutes now. And, you know, we're just going to kind of slide this in real quick to these hardcore guys who've been watching us all this time to let you know, to know about the secret group, hop in it. We're going to spread the word, build the awareness, and it's going to help that viral rush. That's what we're going for. Because every time we can achieve another viral rush like that, it just ratchets us up a notch on the chain of dominance. And that's what we're going to do. Ninja is telling me to check out the Discord. I can't at the moment. I'm using Discord to let this guy be here right now, so I can't do that at the moment. I'll have to do that after the stream.
I can do it. What do you want me to look at? Okay.
If you leave this room, you might end your stream.
Oh my God.
I love this music, man.
Yeah, Ant, that's good, man.
I know a load of rubbish should use old cars so we don't make new ones to save the environment. Yeah. I mean,
no, it's not even that. No, we need to invest in technologies that actually change the planet and stop doing this fake save the planet, all right? Because it's like, okay, if you're living in the US, it's like, oh wait, so our energy should go through the roof for this green system when you have China and India starting a new coal plant like every day.
I mean,
so, like,
it doesn't
make any sense. It's like, no, we need to just do it as a whole. So it's like, if you want more electricity, we need to produce clean electricity. All right, producing dirty electricity is dumb.
I don't like most of what Bill Gates says, but one time he was on a kick about starting up these energy plants using nuclear waste, and basically you create a giant cement pond and pour all the nuclear waste in it, and you can generate heat, and off of that heat you can have a power plant.
There's an island actually,
but it fell through because
I think it's in the South Pacific. There's an island, and this is what they did, and it's a horrible disaster right now. But it happened in, I think it was the early 50s, and there was over 200 nuclear tests at this one island, and they came in to clean the island, and they scraped off all the dirt, like 4 feet of dirt off across the whole island, put it in a big pile, and then mixed it with concrete, and it's this big, giant concrete dome. And now 40 years later, the concrete's cracking, and radiation is starting to escape again. So, yes, it's super hot. It does generate heat, but, yeah, I don't know, radioactive waste is crucial. Like, anyways,
oh yeah.
Speaking about waste, maybe it's not waste, but
Godzilla.
I want to address things that are going on with the gas station. I know a bunch of you guys are waiting for some refunds, and let's just go over that, all right? I was trying to have them out to you like once a week, then gas started going up, then I was like once every 2 weeks, gas started to go up even more, and now I'm like, all right, because a lot of what's happening is you'll see, for example, somebody make a bond on like a Monday, and then they'll make a bond on that Friday, and then the following week it would be like on a Wednesday. So if I was paying them out like incrementally, right? I'm paying $20 to send you gas on Monday, paying another $20 to send you gas on Friday, another $20. Right now, the current monthly spending of the gas station is hit over $100,000. Okay, so that's why I'm spacing it out, because it costs a lot of money just to even send this money back to you guys. And from my standpoint, this is what I would like to see happen, is the actual, because there is some more, there's it's gamed to a certain extent, where people make a bunch of smaller bonds to try to get to that lucky bond, and that was fun for a while, right? But now that it's not like 10K a month and it's 100K a month, well, that's a lot of money. And when you're talking in numbers like that, we have a V2 that we want to launch, and I would much rather put that type of money into very speedy and thorough development. So we're gonna end up putting out another proposal to the community to change the requirements for the gas station, not do away with it completely, but just change some of the prerequisites in order to get a full refund or half refund. We've done this once before. It was successful. People still used it, and people are still creating crypto bonds. We're going to do it again, and community can vote on it once again. I'm just giving you guys a heads up. Yeah, I think it's good.
Checking some of my messages. I've gotten quite a few since we've been on stream.
Yeah. So the listing on KuCoin. We've looked at a bunch of different exchanges, and the way I would like to see the lending platform come out, launch, because between the lending platform and the V2, I don't really think centralized exchanges are going to be necessary at all. And to go through and spend $300,000 to $400,000 on an exchange that is market made by another company and it's not necessarily all real volume, I don't know, it seems like a huge expense,
Sorry, I just saw this other project that copied us. Did you see this, Scott?
No, cool, man. We got a copier?
It's a direct copy. Like, they copied our bond design and everything.
Really?
Yeah.
Cool.
I'm not going to say the name of it on stream.
No, we can talk about it later. I think it's awesome, man. Being copied is it's flattering, because you know what? It's not even easy to copy us. So, I mean, hats off to those people if they were able to actually copy us and the generation algorithm. I doubt it.
It could be a scam.
It could be a scam, but here's the thing. Like, when you're copied, it just means that you were copied because it was good technology. Okay? And I know that we have good technology. So, I knew we were going to get copied anyways. It's kind of like a badge of honor to me to be copied, because the one thing that you can always rely on from us is that we're not copycats. We actually have real, genuine ideas, and we can really build them. So we don't need to copy anybody. We come up with the real deal. And not too many other people can say that, because having a genuine, creative thought is actually difficult. I mean, Jen, how many times late at night before we started this project did I have an idea and I came to you and you were like, we started developing it a little bit and you're like, oh wait, no, we're not thinking about this. This is a huge flaw. This isn't going to work. Scratch in the dust.
Yeah, I'm very cynical.
I talked to you for a while about that, too. Months and months and months, just brainstorming different things, and it's hard. It's hard to create something new, and it's even harder to put it and actually create it. The idea alone, the idea formation is difficult.
Yeah.
So
it's easy to hit copy and paste.
Yeah. Yeah.
That it's flattering in one way. It's kind of annoying in another. But I worry for people getting involved with something that's a copy of us, because it could be smoke and mirrors. They may not be a copy of us. They may be just like a pure rug pull scam trying to look like a copy of us. Because we are, level of difficulty, our project's extremely hard to copy. I mean, it's very hard.
Mm-hmm. Yeah, there's a lot of tech here that other people are. It's confusing to them, especially like we can even touch on like the interest, like the reward rate formula and the dynamic rates. That math was stupid difficult to try to simplify down to have it work in Solidity, to work on Ethereum. That equation was a little different before, but there was no way it was so difficult to get that to work.
Here's the
basic division and multiplication, like it needed to be like a sixth root but that's impossible to do in Ethereum.
If they
so we
if
had
they
to figure out
copied
how to
it,
do that. Like,
if they copied that and then made any modifications to it, they probably screwed it up. That's why I'm saying it's probably not
yeah,
safe to
well,
jump
that's
into.
the big thing that people don't realize about the way we did our rates is that it makes, and I know that there's a couple other NFT projects that call themselves like that have like a financial NFT aspect to them, but their rates, I've looked at other ones, they are advantageous to only make short-term like assets because you can basically manually compound them. So, for example, if you took, we with the way our math works, we ensured that, for example, a 90-day crypto bond, if you make one and mature it, and then make one on that very same day you matured it, and did that 4 times in a row for the whole entire year, you will not compound more than if you just did a 1-year crypto bond. And that's how our math works, so that we can. It's always more advantageous to lock initially for longer. You will make a higher yield than trying to game it and unlock it and take your rewards and relocking it. Other projects aren't even considering that in their mathematics because it's extremely difficult, and it's even harder to put into Solidity how we did that. So I would be very impressed. That math equation took a master mathematician, 2 of them, and I'm pretty decent at math as well, and it was us 3 working on that equation for almost 2 weeks to get it to work in Solidity. And these 2 other guys that were Frankie and the mathematician that we know. I mean, they breathe math, you know, and it was difficult because it's limited by the code base, you know. So I'd be really impressed if other people can figure that out, because math in general is above most people's heads.
Ninja just said something pretty funny. Gold Crypto said gas refund is I'm stepping back and reading our previous comments we missed. Gold says gas refund is precious money that we could be better invested on ecosystem growth. Just his opinion. I agree, really. Jackie says, have any plans to sell bonds on eBay for good marketing? No, I don't have any plans to do that, but someone else is open to do that. I don't think we should be the ones hitting up eBay.
No.
I think eBay has some anti-crypto selling rules anyway. I'm not sure. Merging Footwork says, I made a lot of 90 days, not to game the system, but because I make a $15K a year and I need to have liquid for living. Man, I mean, everybody has their own thresholds. That's why it's adjustable. That's why those different levels exist there. Sink or die trying. That's me. I'm most people.
Well, I mean, and most people, they think that it's like you should be in these passive income, especially if you're working with, if that's your range, because you know, for somebody with like $1 million or something, where it's like if they take a little L here and there, it's not a big deal. But if that's what you're working with, then yeah, you need to protect your investment. You need to be thinking risk management strategies, and that was one of the main focuses of this project, was how do we create a risk management project that helps people in whether it's a bull market or a bear market.
eBay just started to allow NFTs for sale. There's your secondary marketplace right there.
Okay, I didn't even know that. Pretty cool, heck. Thanks for that info. I'll check that out.
Dude, that'd be pretty wild. Whole new untapped market. You could actually profit a lot from that.
Mm.
Those people, they have no idea what's coming at them on eBay.
Oh my God, no.
Ninja says, I feel like a god now. Mom, I made it. Because people are copying our project. Protect your crypto bonds. Ninja's going to steal it. Nice.
Yeah. So that was a pretty long stream so far. I'm definitely hit most of our points here. And
have we touched on them all? I want to make sure we didn't miss anything. Community marketing, we talked about that.
Here's one thing. Yeah, if I definitely want to line up some more AMAs with some groups. We haven't done an AMA in a little bit, but I want to get some community feedback.
Yeah.
What groups do you guys like the best? You know, which Telegram groups would you like us to go and talk to or try to get an interview with? Because honestly, I'm not focused on Telegram or Discord at all these days. Maybe a year ago I was, but now I'm just 24/7 working on Sync, and less research goes into other things. So if you guys are in the community and you know of awesome communities that do really good AMAs, post it. Don't post it here. Go post it in the Discord or post it in the Telegram. Hit up Ant, hit up Thriller, let them know. Hit up Gold, make yourself known, and yeah, we'll get a list together. Because
Oh yeah, dude. Get into our Discord. Get active with the community.
Yeah, and if you guys know YouTubers that want to do interviews with us, we'd love to do these video interviews. And I do believe that we will be doing a round table or a round internet, however you want to call it, almost like a group call where it's gonna be me, Cryptogenic, and then we're gonna have like 3 or 4 other people from the community that can rotate into the video call, and you can come in, ask a bunch of questions, hang out. We'll chit chat as somebody else wants to enter the room. We'll bump somebody else, and kind of have a rotating community for you guys. And I like that kind of style because I want to interact with you guys on a more personal level.
So Synthman, before we go here, Synthman asked about Richard Hart and is he still relevant? And I want to.
I think so.
Yeah, I want to say he's building out something called Pulse Chain. If you guys aren't aware, and I plan on adding support for it because it's easy to do. It's a one-click thing that we have to add so that your MetaMask will connect to it. And basically, if you're holding a crypto bond or if you're holding Sync, remember that when that chain comes out, you're going to get a copy of all the Sync you have here.
Yeah.
You're going to get a copy of all the ETH you have on the Pulse chain. It's a free airdrop, and basically you're going to get double crypto bonds. You're going to get double Ethereum, double Sync, double everything. All of your tokens will be duplicated over there. So, you want to make sure that you're ready for when the snapshot happens. Yeah, that's huge news, right? And so we want to support that because those are free assets for everybody involved, right? It gets a little tricky, though, when you consider, your crypto bonds will still work on Pulse. So if you have a crypto bond here and it's ready to be matured, but you're holding on to it, you can go ahead and mature it on the Pulse chain and get the ETH out of it and get Pulse ETH and sell that Pulse ETH for whatever it's worth. Yeah. So remember, you couldn't find much about the Pulse chain. And speaking of Bear websites, they have a one page with one phrase and that's it. Yeah, there's not a lot of info about Pulse chain unless you see Richard Hart talking about it. He's keeping it. There's not a lot of publication on it. I think he kind of has the. He has the tendency to kind of just release stuff and not really hype it up the right way. He doesn't document things fully. It's like his books and all of his other stuff. It's almost like the ramblings of a madman. Does this affect the supply? No.
It's a different chain. It's a different token.
It's a fork.
It's a fork. It's a hard fork.
So there will be a fork of Sync on it, and you'll get free airdrops for all of that. Basically, the way
that Pulse Sync isn't going to work on ETH Sync's chain. Like, you're not going to be able to take it, and it's not the same thing.
Yes, it's of any token.
Any token. Everything that's on ETH is getting forked right now.
So when you go to Uniswap, in MetaMask, you'll choose the Pulse chain, and you'll have a duplicate of all your assets there. You'll have a duplicate of all of your accounts there. You'll have a duplicate of all of your history there. So if you can exchange all of it for Pulse ETH or something like that, or PHEX or whatever it is, and get that onto a centralized exchange, you can get it back over into a real ETH. It'll basically liquidate yourself over there, before everyone else liquidates their self over there and get some more sync over here on the real ETH chain. You know, that's my advice. Never turn down free tokens. You know, don't do anything dangerous. Don't give anybody your wallet. Don't do anything like that. But if you can get free tokens by just clicking a button, yeah, you know, have at it. Free money. They say there's no such thing as free money, but in crypto there is. Because somebody will be betting the other way. They'll be thinking, oh, Pulse Chain's going to take off. I'm going to buy a bunch of ETH over there while it's super cheap. I mean, maybe you think that way. Maybe that's what you should do. Do you think this will open up a wave of forked ETH chains? And said another way, do you think it's good or bad for the ecosystem? It could be good.
It depends. I mean, it's open source, so it's not just a fork of the chain, right? So it's a fork. It's a hard fork, but he's changing some things about it. So it's supposed to be faster, it's supposed to be different block sizes, and all this other stuff, right? So it's supposed to be an improvement. So if it was just a fork, I would say it's a net negative, because then you're just trying to capture the users from here and bring them over here. You're not adding new users. If you're improving the software, you have an opportunity to grow the ecosystem as a whole. So that's the best thing about open source, is that you can help participate in this system that is growing at a rapid rate, and you build something and that makes somebody else sparks their idea, and they can use pieces of this project and that project, and it helps build a better network. But if you're just trying to steal something, obviously that's horrible. And that's not going to, if you're not improving it, you're just copying it, that's pretty shitty.
I kind of think that's what Pulse Chain is going to end up being, though, because it's basically Binance Smart Chain, except he's preloading the Ethereum database into it. It's kind of low effort.
I would like to see what happens, like what kind of tokenomics it has, if they're identical, if he changes anything at all. So who knows? I think there's other more promising blockchains like Solana out there, like to like host or Chia, for like even for our V2s, you know?
Yeah. You know, and like when the question Crypto Bullseye asked, you know, do you think it'll cause a wave of these chains? It could if it hits home and does well, because he has a lot of followers in the Hex community. It may have this micro effect of like bubbling up and taking off for a little bit, but you know, long term, I don't see it going anywhere.
It's much harder. Well, I'm assuming it's probably a lot harder.
It may attract a lot of users.
Chain than it is to just copy a project. You know, like copying an ERC20, much easier than forking a whole chain, setting up servers, setting up all this stuff, right?
Yeah. You know, I mean, if the thing is that people are attracted to the free money, it may attract a lot of users, and if they enjoy the faster transaction times with all of their favorite projects, it could be pretty interesting, right? It may have some potential to do something, but because it's low effort, it's pretty high risk. Pretty high risk. I wouldn't just be like, you know, jumping in and buying a bunch of it, but if you have some for free, you know, never turn down free money.
Why not? Free money's free money.
I thought they said something about a feeless chain, but not sure. Yeah, it's not feeless. He probably has insane resources to get it done. You know, the problem with having insane resources to get it done is that in Ethereum, you've got 2,000 projects and 200 developers.
Yeah.
Yeah, merging footwork. I pointed up there for you. It's been scrolling across the top the entire stream. Trying to get the word out. You know, it's a tentative date. We're going to try to make sure we release it by that time. There's a lot of work to do, a lot of bug testing. We want to make sure we release something that works really well. Nah, it's all right, man. It's all good. It's all good. Hour, 30 minutes.
Oh, didn't we start at 1, man? 1:10? 2 hours and 30 minutes. Right?
Yes, you're right.
Yeah, we've been going for a while.
It's 2 hours, 23 minutes, 25 seconds. I was looking at the wrong counter.
Pretty good. So we're going to be doing these weekly, guys. We want to bring these to you on Friday. At this time, we're going to be uploading these videos to Twitch, to YouTube afterwards. So if you can't make this time on Fridays, that you're going to be able to watch this stuff.
We need a volunteer to make timestamps too.
Yeah, timestamps would be great. We'd love to have one of you guys. If you guys can go through, make timestamps, that would be awesome for us, and then send it to us. We'll upload it to the video. Um, More of this though, because we want you guys to know us. And it's not like this whole stream, it's not just about sync. We know a lot about crypto in general. We've been in crypto for a long time. We've seen a lot of things. We've made a lot of mistakes. I've gotten wrecked before on a few occasions, and then it's like, okay, learned my lesson there. Learn my lesson there. Don't do that. And that was years ago. So it's like, if you're getting in and you're new, come check out these weekly live streams. We want to go over all this stuff to make it easier for you guys. It's important for us that it's not just buy our token. It's why. What's important? Why does this even make sense? You know?
Yeah.
So, yeah. Come and check us out. Every Fridays, we're going to be going live at 1 EST. That's 5 p.m. UTC. And we're going to be here. We're going to get it up on YouTube as well, on D Live. I would like to even get it streaming across Twitter as well. And yeah, we're just going to help this thing grow.
Give us some suggestions too. Anything you want to see on the stream, let us know. Guys, upload video Mr. Ant about Sync Network on your YouTube channel. We can do that. We can get Ant up there.
Yeah, definitely.
Ant's the photogenic one anyway. Sync makes the most sense. Nice.
I like that.
Yeah, dude. If you guys want to submit some ideas for like merch or T-shirts or anything like that, send us your artwork. Send us your fan. Yeah, send us your fan art. We want to see some fan art. We may put it on a T-shirt or something. We need to get the word out. I mean, I want to buy some Sync merch and get some good Sync merch too. We have links on our website and our DApp.
Yep. It's going to be coming. I know I've been talking to Ant's been heading up the merch store, and he's working on getting a bunch of hats made. I love crypto hats. I don't think you guys can tell. This is a Bitcoin hat. But
nice.
I love it. I love all my hats and my merch. So need some Sync stuff. That's coming out pretty soon.
Got the Bob Ross emojis in the chat. Genfly live.
Waiting on the gains. Cart is full. Send it.
I know. I've been slacking on my channel. I'll post something soon. And yeah. We've heard that before. Believe it when I see it. Fulcrum, take my money already. Make a hat with a mesh back.
Yeah, trucker hat, you mean? Yeah, we're gonna have a bunch of them. We're gonna have a bunch
like
of
this.
stuff. I wouldn't mind a mug. I like giant coffee cups, so it'd be cool to have maybe a crypto bond on a giant mug or something. All right, I'm getting kind of hungry.
Yeah.
You got anything else, Cryptogenic? Do you guys in the chat have any other questions I can answer for you before we hop off?
No, I don't have anything. Where do you get your shirt? Where'd you get that Bitcoin shirt? They want to know.
This Bitcoin shirt? I think I got this off Amazon, man. To be honest with you. Yeah.
Amazonian.
I got a couple of these. I got another one that says "I told you so," and it has like the O is the Bitcoin emblem.
Oh, nice.
Yeah.
That's a good one.
Good. Yeah, I like that a lot. It pisses my friends off because I did tell them. I've been telling my friends to buy Bitcoin. It's like just years and years and years. And I got a couple of friends that are in the military, and they're just like, "Oh my God, I got another deployment. Am I ever gonna not be broke?" And I'm like, "Yeah, man.
Hang on,
should have been buying crypto for the past 5 years, like I've been telling you, just a little bit every week.
Yes.
Could have been retired." But
hey, Mike.
Yay.
How's it going?
To each his own. They'll buy when it's $1 million a coin, probably. Because here's what happens. It's like, oh, it just ran up to $100. I can't buy right now. Oh, Bitcoin just dumped to $1. Oh, I'm glad I didn't buy. Oh my God, it just ran to $1,400. Well, I can't buy now. And then it's just like the same thing. I heard him say that 20K. Oh, I can't buy now. It's like, no, you should have bought 3K when I told you to buy 3K. And then the same thing again. Oh, it just hit 60K. I can't buy now. I'm like, you're never gonna buy. You're always gonna be broke. Have fun staying broke. You know, like that's the have fun staying broke. You know. So I don't even know where Cryptogenic just went. What happened to him? Well, I can't end the stream without him, anyways. Maybe he had somebody at his door or something. Yeah, merging footwork. Buy sync at 6 cents, sell at $6. That would be a good play. Where are we at right now? 7.5 cents. Bouncing off that, bouncing off the floor. It seems to be creating pretty well. And I mean, just looking 80x in 80 days. 80x in 80 days. That's insane. That's absolutely insane. When projects go 10x or 20x in 2 months, it's insane. But 80? Really? I'm very intrigued to see what can happen when this makes another big move. I mean, think about it. We're only at we have like a $6 to $8 million market cap, roughly. I just don't think it's very hard to pump this coin in general. Just from a liquidity standpoint, it doesn't take much. I think you can probably pump the price of the token for you could probably do 50% for like a couple $100,000 right now. Let me look at it. B2. Yeah, if somebody wants to pump the price by 50%, it would be all you would need. Hold on. Yeah, it's like less than $1 million. 200. Yeah, you're at like about $1 million, right? So $1 million can literally rocket this price, not 50%. It would like 2x the price. So that's not even that much when you're talking about a $6 million market cap. I've seen things run up so quickly. We'll see what happens. My God, my bonds are gonna be milky or millies. Oh, millies, yeah. Like I said, they're gonna be milky. Yeah, 55K sync for an ETH right now. That's really good, because the price has been staying pretty stable for the most part to the USD, but you're getting a way better ETH price right now just because ETH has just been rocketing. But I don't know, ETH is showing some signs of struggle here at this range, which made a lot of sense, right? Because it's pretty much the same multiple that Bitcoin went up, right? Bitcoin ran up to like 65K, which is like a little over 3x over that 2017 top, and ETH is kind of struggling right at 3x their 2017 top. So I think we're coming up to alt season, and we're coming up to microcap season, and I don't think people understand how fast these things can fly during alt season. And hey, do you want to buy when the token is down 70%, or do you want to buy when the token's up 8,000%? You just need to ask yourself that one question. I think it's an easy question to answer. I never like buying things that are in the green in general. I'd rather buy things that got wrecked but still have strong fundamentals, because that's the biggest thing. Is because token swing, the price swings is just a what's the can't even think of the word. Price discovery. Jeez, price discovery. And price discovery can be ugly. It goes up, it goes down. But as long as the fundamentals of a project aren't changing or are only improving, the price is just will move in cycles. That's the way these all work, and that's why a lot of crypto charts, they all look the same. Yeah, it's a big pump, and you have your pump, your breakdown, your flat line, then you pump again, right? Like, look at every crypto chart. It's the same pattern: pump, dump, flat line, pump, dump, flat line, right?
But it ratchets up every time.
Yeah, and it goes up, it ratchets up every time, and it's just price discovery. So you need to be looking at fundamentals as well as technicals if you don't want to buy a top in general and you want to buy a bottom. But like, yeah, this thing's price is awesome right now, 7.5 cents. It's incredible. I can't believe it got back down this low, to be honest with you. But it also didn't just collapse to this price, and it slowly comes down. To me, that's a beautiful, beautiful chart that's printing right now.
Yeah, ebbs and flows. Sorry, I had to run off for a second there. I've got a lot going on today. I'm going to have to leave. But, Ninja. Hey, Scott, what do you think of the Polkadot and KSM? They are doing well in the present market. Yeah.
Yeah, they're awesome, man. Like, these other projects are great. I love new technology that's trying to solve real issues, you know? And I think the more of that we can have, the better. Because, you know, what are the other developers doing? They're creating copycat scams. So if you're a developer and you're creating new things that are trying to increase the overall crypto market as a whole, dude, hats off to you. Love you. Thank you very much.
Yeah, Fulcrum, I'm a Canaria founder on KSM. I very interested in their project. I think what they're developing is amazing, but you know, it's extremely high risk right now because it's not in production, right? It's not in active use. You know, and with KSM in particular, that's where all the excitement is going to be happening. You know, I love this tweet. This gets me every time. Who was it? They said, I'm like Polkadot in the streets and Kusama in the sheets. Because they're the same thing, but like Polkadot is where everything has been finalized and is ready to go, whereas Kusama is where all that hot development and those early gems are going to be before they get to Polkadot. And that's where it's the exciting place is right now, you know. I'm going to take a screenshot of the current price of Sync and post it after 1 year in groups where I told them to go buy with I told you so. Nice.
Yeah, there you go.
Nice.
There you go. I like it.
It's a good feeling to say, you know, I told you so. All the people, I have told so many people to buy Bitcoin over the years. You know, and I tell them, don't put in more than you can afford to lose. Just get a little bag, right? Even if they had just like a little $100 bag from like 10 years ago when I was telling everybody about this. So a lot of them are coming up to me apologizing, like, I should have bought a bag.
Yeah, you would have tons of money right now. And that's why just holding, you're going to make more money. You know, you have exchanges get rich, like the exchange founders get rich, and then long-term holders get rich, and like people that are just trading back and forth, trying to scalp, trying to improve, they get wrecked. Just happens. Just hold your bags. You'll be thanking me in a few years. Yeah, just holding is always a better strategy than trying to flip coins. Yeah.
Oh, dude, it's mind-boggling. If you look at what you can...
It's even better than buying mining equipment. Just buying Bitcoin or just buying ETH or any token instead of trying to mine it where you have to buy a hardware. Like, no.
Dude, all heck, you should change your name to DCA Master, man. DCA God. Buying Bitcoin a dollar of Bitcoin every day for 830 days.
Nice,
Accumulated about $5,000. That's very nice. Hardest thing to do will be managing the top beginning of the bear market. Yeah, maybe. I mean, this whole cycle is going to draw out itself much longer than the previous ones, you know.
I think we have, this is like a super cycle, and I think it goes all the way until 2023, more than likely. That's just crazy. Based on like Fibonacci time zones and just kind of like the way things get larger proportionally as time moves on. Yeah, I'm calling 2023, end of 2023.
Yeah, well, you know, if you think about how much bigger the market is in terms of people involved with it, whoa, started lagging. In how many people are involved with it, it's harder to move a lot of people like that. Guys, I'm going to have to go. I really appreciate all of you being here and hanging out with us during the stream. I look forward to seeing you again next week. It just can't come fast enough, really, because I love seeing all of you guys here. Roscoe, Allhead, Gold, got Ganjadlo, Fulcrum, everybody.
Gold,
Gen Fly.
That's your best thing you can do is learn that.
Fantastic stream. Thank you. Crypto Cobble.
All right, guys. Thank you, guys.
Yeah.
Time for me to go eat.
All right. Talk to you guys soon. Later, guys. Oh, it broke. It broke again. What am I doing? I need to just end the stream.
I turned off my camera.
Okay, I'm good. I'm going. Bye.